Howdy, Amy. I see Lee is here as well. I understand both of you have background noise, so I will not ask you to speak today. A lot of people have stuff going on in their houses with their significant others and whatnot, and so people are adjusting to what they have to. By the way, I put up a new session, and I really strongly encourage you guys to be here for it. If you look on the calendar, I didn't explain exactly what this is, but the session called What You Do, quote unquote, in the markets, challenges of communicating with family and friends, and most importantly, significant others. I didn't have room to fit that in the title, but I assumed that was implied. Having a wife, husband, boyfriend, girlfriend, kids, parents, whatever, in the same living space as you or not, is really challenging for them to understand what you're doing and that it's a business and how it works. And that's assuming you understand that, which is a huge assumption. But once someone gets to the point where they actually have an understanding of the markets, to the point where they can consistently be profitable and take money out, that becomes a huge challenge because unless someone's at the level you are, they just simply will not understand it. And no amount of explaining will get you to the point you want to get to. So that's the session tomorrow at 9. And I'm going to just tell you some of my experience, and Lee and Amy have offered to share as well, and a few other people. So we're calling it a roundtable because it's really going to be more of a discussion than a presentation. So please join us for that. Everything is always up in the calendar. When we add something, I always throw it up as an announcement. So please do check the announcements. And I will frequently do an @everyone, which will literally alert you to it. And if you look at this threads button right here, if you click on that, any threads or conversations you're in the middle of, you can see where they stand, no matter what channel they're in. So one of the things that's important to do here, if you're going to get the most out of our entire program, is learn how the Slack works, where things are, how to search for things, how the channels are organized, and try to stay within the organization that we've created to the extent you can. And if you don't, we will try to guide you. But if you don't understand Slack at all, if you've never used it, that's the first place to start. All right, it is 9 o'clock. So here's the plan. I'm going to do open Q&A. And we're going to do that for half an hour, and then we're going to start the boot camp session. Although this is just a boot camp open Q&A. There shouldn't be anybody else in here if they're not in boot camp, because they shouldn't have this link. All right, let's see. I'm going to go through the questions and comments. Yeah, there's no such thing as big boys. Joe, that's furu bullshit. There are large traders, but it doesn't work like that. And people always think that they operate in collusion, and it's just volume is volume. It doesn't matter if it's 1 million little guys or 1 big guy or 3 big guys. That goes on the nonsense channel. So there are absolutely no big boys, yeah, as Lee said, or they. We do believe in algorithms, but algorithms are just a tool that a trader uses. I use algorithms, Lee does. Big traders use them, little traders use them. When you're using a automatic trade management, an ATM in Ninja or in Jigsaw, you're using an algorithm. Guess what? So yeah, a lot of those get thrown around as ways to blame. It's kind of like blaming the other. In any tribal society, it's always the immigrants that are suspicious. Same thing. There are no big boys. That's BS. So just to set that straight. Okay, I'm going to go back to the questions and start at the top. How do you game a market that just drifts up all day? Walk away or be creative? Question mark from David. First of all, this is not a market that's drifting up all day. A true trend day, like you're describing, where there's literally a bid under the market all day, does not look anything like this. This is a lot of price discovery that more or less is moving up, but it's by no means has a bid under it. continually. The vast majority of the move happened right at the open, and then we've made the first hour high. We're above it. It's a ledge up there. But again, you know, that may be how the rest of the day plays out. I'm not saying you're wrong. I'm just saying it's way too early to make that assumption. But the best way to see that is just looking at the cascades of volume, David. It's pretty straightforward. If you take like a 2-minute chart and look at the wave volume, you know, you should see just every pullback get attacked as soon as it pulls back with buyers. And that would be a bit under the market. That's not at all what we're seeing. Again, we've seen a couple of really big moves. And then, you know, consolidation kind of behavior. And, you know, and if you look at these volumes, this pullback, that was a real large amount of volume there. On that, that is not, you know, a bit under the market kind of volume. That was half of the thrust up. You know, if it was, you know, 7K instead of 64K, then I would be agreeing with the point. So, so first you got to get it right that that's actually going on, number one. And if it is, the trick is to look at the wave volume and the springs, you know, if it's going up, or the up thrust if it's going down. It's actually very gameable, but you have to first understand that those are the conditions you're seeing. And that's not what we're seeing here. We're seeing selling into the market, and then some of those guys are getting squeezed out, and, you know, but this is not behaving like there's a bid under the market at all, at least not yet. So that's the answer to that one. Okay, Joe says, please explain the 5-minute trade, how I would have traded this morning, and the LRC versus the order flow. That's a good question. Let's see if we can attack that one without a ton of time. Oh, let's see. All right. So, whoa, what did I just do? I just did something I didn't want to do. There we, whoa. Oh, I dragged my indicator up onto that panel. Okay, well, let's see. We didn't want to do that. So let me just reload the template. That'll be the fastest way to fix it. Hang on one second. Every now and then that happens. If the computer's doing something when I go to drag or click, and so that's why I always save templates for all of my different chart setups, so it's real easy and quick to fix stuff like that. All right, let's just let this repopulate, and then we'll answer that question. If you're just coming in, what we're doing is open Q&A until 9:30 when the regular session is going to start for Bootcamp. So keep posting questions if you have them. I'm literally just working my way through them. Okay, so, and I'm not going to give you detailed answers to any of them, by the way. It's going to be relatively just short, quick answers. So here's the thing about the Open 5, which I can't really show you, Joe, with the LRCs, because I would have had to show you at that moment, because LRCs are real time. But the point is, just by looking at the price action here, I could tell you pretty obviously, you know, we opened here, there was a very aggressive move up. So, you know, any kind of, I don't want to use the word retracement, but any kind of volume that wasn't strong on the downside, contrarian to that, I would kind of look at as a buy signal as long as it stayed, you know, above the low. So this is the Open 5 high, this is the low, and, you know, that was a strong move if you caught it. This was a kind of a no-nonsense place to try it again. You know, then it went into consolidation mode, and we're going to talk a lot more about this in the session again today. So I'm not going to spend too much time on that. But after that, then the move was pretty much over. So these kind of pullbacks, see, again, it's about the volume. And see, you know, this was an aggressive move up with an equally aggressive move down that just suddenly turned. So that turn was kind of your clue. But now we've got all this sloppy volume in two directions, and nobody's really committing one way or the other. And then it kind of broke back down to the same area, and then it kind of teased it, and then it went up, but again, not real aggressively. That's how I would be reading that right now. But the LRCs only appear, you know, at the very real-time edge because they're gaming it real time. So for example, right now, you know, if we were going to use the first hour high and just change your question from Open 5 to first hour high, I would say this is the inflection point I would definitely be watching right now. It's gotten bought every time, And after, you know, a little bit of attempts to sell it that didn't really get anywhere. So, you know, there's some strength in the market that if I saw an aggressive move past that opening 60 range, the first hour high, that would kind of be my clue that there's a nice short there. And you could even front run it a bit right now because you can manage risk pretty well. You know, put your stop right there and be short here. So that's a short answer to the question. You know, given the level of knowledge you have on that setup, which, you know, I know you're new, so that's the best I can do without a whole nother class on that, which we will do more of. Okay, David. Whenever someone asks why did, and then there's something about a news item or an economic release or what, and then they try to figure out why the market responded one way or another. Again, over and over, I've got to tell you that the news is irrelevant because you will always have the wrong idea of what the news should do. Markets don't work logically. So as soon as you can stop thinking that way, you'll be better off. You're not smart enough, and nobody in this room is smart enough, and no economist or trader, it doesn't matter how big they are, is smart enough to understand the ramifications of that. You know, it probably could have been short covering. It could have been, remember, you know, there's all kinds of dynamics here. The Fed has almost a blank ticket to influence the markets and to buy stuff. They could have jumped in and bought 20,000 contracts. Who knows? And again, David, who cares? And again, David, stop thinking that way. Just look at the reactions. Don't think about what it was. I didn't even pay attention to that. I wasn't watching. I was just watching the trading. Again, that should be something that you should understand by now, but I realize it's a hard thing to teach yourself because there's so much chatter about the news and how it, quote unquote, is affecting something. You know, that's all furu nonsense. You know, and real-time news feeds are also furu nonsense. You can't react fast enough, even if you're a computer that was programmed by an MIT PhD. You know, those guys can do that kind of trading, and even for them, it's difficult. I hope I'm making my point clearly enough. I'm trying. Let's see. David, when volatility comes down, do we sim trade to find out bubble for the trade? Okay, again, volatility, you know, guys love to throw around, you know, the volatility is this. Volatility is not just the VIX. That's just one instrument of it. And it can disconnect from the price action for hours, days, even weeks at a time. So again, this is one of those things where you think you understand something that you don't. And the best thing to do is just stop trying to think about things like volatility. You know, the best thing to do is think kind of in risk on versus risk off mode. And this market, until further notice, is risk off. You know, you'll know it if we go to oh, the lows are in, you know, get long kind of market. And there's a bunch of guys out trumpeting that that's happened. And, you know, who cares? Predicting it is just stupid. And we are not seeing that right now. This kind of price action, this kind of trading action is not at all reminiscent of, you know, the lows are in and everybody's rushing to buy stuff. You know, remember what I said yesterday, last session, where we took the range chart. I took this chart. And I don't know if you remember this, but I looked at just the most recent drop and I drew, just for pick an indicator, I drew the fib retracements for that, because a very common way that people look for bounces where they should maybe bounce to is something called the ambush zone, which is like the 50 to 60% bounce. Okay, so just for fun, this is not even the high, just a recent one. And this is, you know, kind of a recent low, right? The fib ambush zone right now is between 2709 and 2836. Okay, that's 200 to 300 points above us. So what that's saying from a technical point of view is we could bounce another 200 or 300 points up into here, and it would still be a bounce in a downtrend from a technical point of view, which is why technical points of view are so useless, because, you know, that's just such an enormous range that it makes no sense to even think about it. You got to go with just what's happening now. Okay, so that's the answer to that question. Let's see. Next one's one of us could make a 20. Yeah, we're working on a newbie thing, David. That is a good idea. Newbie manual introduction. That is something that's under construction and a good idea. And we might recruit people to help us do that as well. Okay, Lambert, is there a difference approach between scalping in a 20-point ES day range? Oh, absolutely. Absolutely. Just think about it. From a math point of view, the what would a range be that's significant in 20 points, a 20-point day? Well, obviously, if you went from, one end of it to almost the other end, let's say you went 18 points in one direction, right? And so you're 2 points from the edge. If it's a 20-point typical range, that's pretty significant. But in this environment, where we've got ranges of 100 and fib retracements of 200 or 300, of course, it's very different. And that's why you're seeing, sweeps, which is where, it takes out so many levels at once, like it did here. That's what happens when a 200 lot or 100 lot goes off and the market is as thin as it is. It's very rare to see this little amount of, bid and ask, although this is better than it has been. But, typical is 3 digits. And, we're struggling to hold 2 digits. So, of course, Lambert, and that's an excellent question. It's completely different. You have to give it more room. You have to be willing to take more heat. If you're a really good range scalper, it's actually easier to do it with a couple of contracts than with a 1 lot. But you can also really get upside down quickly if you're not good at that. So yeah, the considerations are completely different, although the technique isn't different. So it's just experience and practice. Okay. Let's see. He takes a sip of coffee and reads the next question. Okay, David, I'm just reading your next comment. That still is not what a bid under the market looks like. A bid under the market doesn't pull back. It doesn't go down. It, so here, let's just grab this one again. And, this is consolidated once there and then broke again, but it's holding at the first hour high and it's not breaking from that. So until further notice, this is a range day and it's not exhibiting any of the things you think you're seeing. Okay. That doesn't mean it won't later, but it's, just look at the high volume node up here that, is a ledge, but it's way, way above us. And, the VA doesn't start till down there. And there's a bunch of chunks of high volume nodes down here, another big one down there. This is just not what a runaway bid under the market looks like. So, but I know you're new to it, so you'll get the hang of it. You're asking good questions. Just you're at a phase, David, that I've been at a bunch of times, and every now and then, if I don't have enough coffee, I do again, which is I see things that aren't there because I just think they're there, and I want to see them, at that particular moment for whatever reason. Okay, Bar asks, could you comment on NQ? It moves in line with your setups. It was bought at open 500. Okay, I'm still not understanding your question. Could I comment on NQ? Okay, can you elaborate or rephrase that one for me? I'm not sure where you're going with that one. Okay. No, Jonathan, we don't want to apply an offset to the LRCs because we don't care what they looked like in the past. Watch the videos. I know you're new and I just had this conversation with you on the Slack, but you have to understand that order flow couldn't care less about the past. So running backwards, trying to understand quote unquote support and resistance levels is exactly what we do not do. So the best thing you could possibly do to catch up is watch the videos from the workshop and it'll make sense pretty quickly. Okay. So Jason, could I share my thoughts on watching the P&L while trading? Yes, great question. I only watch it from the following point of view. And there's 2 really big schools of thought. This is a great question, by the way, Jason. It's really individual, number one, which is true of a lot of things in trading, because you don't have a general manager sitting there telling you the guidelines for your job. You're constantly figuring that out on your own on the fly. And so you're your own entrepreneur, but you're also your own GM, and that's a complicated thing to do psychologically unless you've really trained yourself to do it, so and practiced. So your question's a really good one, and the answer is twofold. Guys like Pete Davies at Jigsaw and myself, um, we kind of come from the point of view that this is a business and I'm in it to make money, so I want to know my P&L. So but there's two parts to that, so allow me to finish my sentence. For example, if I'm just trading right here, and I don't know, let's pick a direction, let's say it's short. So I want to know, as it goes my way or doesn't, if I'm making or losing money in that trade. So for me, it's really just about that trade. I know where the break even's at, if I'm scaled into it or not. I, on the fly, make decisions like I just did. Do I want to go ahead and take 2 ticks there, even though I probably can get more, blah, 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 blah. All right. That's all like active trade management of a good discretionary trader. And so, Pete's point of view, my point of view, I know you've got background noise, but I'd love to have you elaborate, Lee, in a second. I'll unmute you if we can try it. For me, it's about trade by trade, because I know that my P&L, if I'm scalping and I'm picking up $20 bills scalping, or $50 bills or $100 bills, I know the totals roughly. They kind of accumulate in my head. So I don't care about my totals for the day or whatnot. And I'll never let a trade get anywhere near my daily loss limits. So, if you were doing like a top step 50K with a $1,000 daily loss limit, I would be trading that with a $200 loss limit. And I would have Rhythmic lock me out after that, because it's just silly to try to use more than that. You shouldn't be using more than 1 lots under these conditions. So if you're letting it go 4 points against you, you're just doing it wrong. So so that's my view for the kind of trading I do. I think having your total P&L it should be an awareness, but constantly watching it, I think, is losing sight. But having said that, you've heard me also say that the number one reason and the only reason we're in the market is to take money out of it. And so that's why I focus on the P&L of a specific trade, because, if you get deer in headlights syndrome for a split second in some of these instruments, in ES or in NQ or in CL, and you don't react to a loser, you can end up losing a lot of money so quickly that I just think not keeping an eye on any individual trade is really stupid. And a lot of times I hear people say, well, you have to give the trade time to work, and there's just nothing that is more wrong than that. That just means you entered wrong. You never, quote unquote, give trades time to work. That's more nonsense from the furus on Twitter. They work right away or they don't, and if you entered properly, you should work right away. It certainly shouldn't go against you right away. So, from that point of view, it should be about maximizing your P&L and your execution and minimizing your risk. So I hope that makes sense. I know that was kind of a multi-tangential answer there, Jason, but if you can give me some feedback for the answers, and if you have a follow-up question, you feel free to do that, everybody, too, because that is really useful when I'm doing this. Okay, let's see. Lee, do you want, I know you've got music going on in your house. I'll unmute you for a second. Do you want to chime in on this one? I think you have a good opinion.
Yeah, I agree. And I think we can explore it tomorrow at the round table as well. I think the only reason you ever need to be aware of your P&L, your balance, is when you're approaching the low side of it. Are you trading more size than you can deal with and you're going to get auto liquidated or that kind of thing? If you're up, who cares? What it draws you into is squeezing too much out of a trade, or I'm going to hang on for nominal round number, and then you mess up what you're doing. So I think your daily P&L, consider it at the end of the day when you do the books on your business. For each given trade, yeah, you've got to be aware of what that trade's doing. But the point is, we've got the 3 outcomes to the trades, haven't we? So as long as the trade is positive, that's adding to the bank on the day.
Yep, great. I could not agree more. Thank you for sharing, Lee. I just put on, oh shoot, I have my wrong ATM set because I'm just playing around here with, I was going to show an example of something, but let me get it set up better. So just to answer your question, I thought that's what you meant, and I did look, Bar, about NQ, and basically, yeah, that was a really sweet short setup up there in NQ. It got up to basically what was the ledge. Remember we discussed that in the last session about ledges, and I'll talk more about that today in the full session. And it got fold up there, pretty aggressively too. Let me switch this out a little bit so you can see the width. This is equivolume. So there's your ledge right there. And the beauty of the ledge setup is always that your risk is a tick or two, so you had a couple of shots here at getting short, and then at the first hour high, that would have been a great spot to get out of that short, because basically what you're doing is you're just playing the idea that this range is going to fill itself in ultimately. So odds are this ledge will get pushed up a little bit again, and if it doesn't get too far, then you'll end up seeing a real nice normal distribution. So good question, and I hope that answers it, at least to the extent that we can in hindsight. Okay, moving through the rest of the questions. Okay, and oh, great, Jason, thank you for responding to that. And the point that Ali made, I want to elaborate on, because that's a really good point. If I'm running like near the amount of margin for, maybe I'm doing a 10 lot micro, and in the account I only have $1,000, and they're moving the margins around. That kind of time, I might keep an eye on it, but I generally don't keep it that close. The micros and our little baby account is really the only place I do that. But lock limits are sometimes worth thinking about with respect to your P&L, and so it kind of comes back to the same thing over and over again. It's kind of always about context. That's a good way to think about it. Okay, Jim, price squawk, trade the news, financial juice. Okay, those are all different things, Jim. All of the ones that are squawking about news events are, yeah, those are a complete waste of time. Even if they're real time, the response to the news will be instantaneous. It will be way too fast for you to even see, let alone respond to. You're not an HFT trader. Price squawk is an audio tool that I discussed in the last session, and I was pretty clear on my opinion of its value and whatnot. So I'll refer you back to that. Okay, let's see. Good, thank you, Mike. That roundtable is going to be fun, and it's going to be really informative, particularly that we're all, sequestered at home. Having your significant other, and this is the session tomorrow morning, it's on the calendar, having your significant others understand, even for an hour, what you're doing in your trading room, and that you need to focus, and that you're not just, on the computer and they can't stick their head in the room and say, honey, I'm going out for a second, can you watch the baby? They just will not get it. And I'll talk about some ideas on how you might be able to deal with that. Okay, moving down the question list. Oh yeah, Joe. Overnight net short, long, all total furu crap, and nobody knows. And overnight is meaningless because most of the big players in the market don't play overnight, or if they do, they play with tiny size. That's why the open 5 is significant. Joe, I can just tell, yeah, it really would be of value to you if you watch the videos sequentially. That's true for anyone new. So, we're not just telling that to you. All right, let's see. Okay, well, that's the next question about the LRCs, Joe. That is what we're going to talk about today. But again, you need to understand this is not something you're going to learn in 4 bootcamp sessions over 2 weeks. It's going to take a lot of good practice. Oh, Amy, you're good now as far as are you mic'd up? I'll unmute you. Maybe you can comment on P&L because you're really good at keeping that tight and just hitting your targets daily. Come on in and tell us what you think, Amy. I have unmuted you.
So,
good morning.
Yeah, P&L, that was something that was hard for me to peel myself away from. And if you are too married to anything in this business, it is a detriment to your trading. that stay frosty that you say all the time is so true. So yes, you gotta be aware of your, especially if a trade is going against you, but more importantly, if you do those tick drills over and over and over and over, you will have a good sense of when the market is doing what you think it's gonna do and your trade is good, and when you need to get out of it because it's not. What was there when you took the trade is no longer there, and you just have to hit the cut it loose button. You just flatten everything, take a breath, reevaluate everything, lick your wounds, and know that if you have that skill to tick your way back to profitability, you just do it. Even this is a job, and there's a reason why work is a 4-letter word. Sometimes it's hard. If it were easy, everybody would be doing it.
Oh, that couldn't be more true. And in fact, in the boot camp, I'm going to address that in some detail. So that's good stuff. Thank you, Amy. I was looking for the picture she was referring to, and I frequently post, "Stay frosty" as a quote after I say what I think of the day, and just to put that in so you understand what that means. It's both a military term and a gaming term. It basically means stay cool, calm, and very alert. That's what stay frosty means. So, all right, let me zip through the rest of the questions here. The session's supposed to start in about 2 minutes. We're staying in this room. You don't need to leave this room. It's this. So I just want to stay on schedule. Otherwise, we'll be here a long time. Okay, so let's see. I'm looking at questions. Yeah, waiting for trades to work. It's mind-boggling, Brent, but they still sell that crap on Twitter all the time. Okay. Rainbow colors on the tape. That's a good one, and I'm going to end with that one, and then I'll go into my agenda. So one of the other terms, I say a lot of things frequently, and I don't always elaborate on them because the idea is you kind of pick them up over time, doc-isms. And the rainbow tape quote, and we're seeing them right now. Just think there are multiple colors of the rainbow. They're red, they're green, they're cyan. That means basically that buying and selling is going on, and there's no direction in play, that the auction is actively going on and price is being negotiated. And one of the best ways to see that is go to a faster time frame on a footprint chart like this one that I just reset on my share here, and give it a second to get the data, and you'll see what I mean. You know what, I'm gonna kill another application here just because, give us some more bandwidth. We do not need Thinkorswim. All right, there we go. So you can see the kind of jiggling back and forth that goes on fast footprints. And if there is some sort of trend under it, it won't be rainbow here. It'll have a dominant color. So like right now, because of this bar right here, we're actually getting a little green dominant, and we're heading back up to the high. So interesting to see, if you watch the tape and the big blocks here, if they can push up here and maybe take out this high volume node, we'll probably make new highs. And so that would be a decent long trade from here. And, we can do it if you want. So, all right, it's already starting to work. So let's see, maybe we'll add to it if it comes back there. And this will be a good example. We'll kind of wrap up with this, and then I'll start my agenda. I just have a sense here, and that's why I'm doing this way as a one, and add to it if it pulls back a touch. This just feels like we're going to get a push up to new highs, in which case, let's put the target up near there somewhere for the first one. You know what? We probably should. Oh, we got the second one. Cool. All right, so let's let this play out, and we'll scale out of it just so I can start the meeting on time. If it does in fact work, I may be wrong. But if you want to see what the LRC for this looks like right now, that's it. So I'm kind of, looking for this area, which is 86. It's above both of my targets right now. So, okay, here it comes. Here we come. Okay, there's the first one. Now we can put the stop under the second one, and we got out of that one profitably too. So there you go. That would be one way to just go with the flow. Forget that there's resistance up there, because that's bullshit. There's no such thing as resistance. You just got to watch the tape and, where's the predominant energy? And a rainbow tape is a quote that I made up, and another trader I know uses it too. I don't remember which one of us used it first, but it comes from poker. When you get a rainbow flop, it's basically a lot of different cards, a lot of different suits, a lot of, picture cards, not picture cards. And it's basically means there's nothing there. It's just a lot of everything. This is a rainbow tape, but it has a long bias because all the blocks are going by on the buy side. And you can see, if you just look at the energy of this footprint, it's pushing up slowly and it's struggling, but it is working its way up. So, you don't want to just jump in long, but buying pullbacks in this kind of a scenario is a good risk reward trade. So, and you can see that's the story that the LRCs are telegraphing. Oh, see, now it's about to do exactly what I just told you it was going to do. And we're going to break to a new high here and probably end up here somewhere where there's a guy trying to dump 400 and you get the point. All right. How is the NQ ledge looking into this strength? That's a good question. It's doing pretty much the same thing. So there's the NQ ledge. And that's correlation, that they will always, not always, but on a correlated day, they'll work together. And also note that that's in NQ, that's a previous day high. So I'd say the odds are overwhelming that we're going to blow through that 77.61. But, I could tell you that you could still lose money trying to trade it. You got to get a good entry on it. And, and that's got to be on a pullback to one of the high volume nodes. So, maybe you could try to get in here, maybe, I don't know, get in one there. I don't want that one anymore. NQ is harder to play because it moves so much faster, and you have to kind of pick your spots and hope it comes to you. 25 might be a good spot. That's kind of what I do with NQ, just to kind of let it come down to me. And then, if I get hit there and then the buying comes in, then I got it right. If I get hit there and the buying doesn't come in, then, I stop it out with a couple of ticks loss. And, look how close it came to me. It's teasing me. It doesn't want to give me a fill down there. So, in this circumstance, I might go ahead and put one on. Oh, it doesn't want to let me do that because I have that other order. Anyway, that's just an order entry issue right now. Let's sell that guy there, and then let's see if we can get the second one. So you see what I'm saying? It's so much more aggressive in both directions that you have to give it more room, and you've got to put your, kind of your entries and exits real wide apart and give it some room to come to you. And you can see this is profitable, but it's all over the place. And there we go. Now we can get it. Oh, can we get a stop under it? No. Sorry. Nope. I almost got the stop under it. It filled right before that. All right. Anyway, let's go to class material. And do I use last in, first out? It's not up to me, Ferv. That is done by your broker, and it's always first in, first out. Okay. Let's see. Any other questions? Okay, good. All right, let me throw up the agenda and we are going to go over and do the class because we're about 5 minutes late to start now. So let's go to that. This is going to be session 4. And once again, got to give you guys the disclaimer. This is educational. Do not try this at home with real money unless you know what you are doing. And even then, it is extraordinarily difficult. But, if you get good enough at it and you practice enough, it is possible to do this well. This is our session. I want to just, before we get too far into this session, I want to review some of our assumptions we made in the very first session. And actually, we made them in the free session as well. And then I want to review those because some of these even came up in questions just today. And so, I really have to pound this back in, this idea of you guys having a blank slate, the tabula rasa, forget what you think you know or what you've heard elsewhere and just try to assume that everything on this slide is all you need to know and that these are the only assumptions that matter, okay? So markets are auctions. When price is moving as we've been watching it, let me just, I'll be able to drag this out of the way for a second at a time. So, right now, at any given moment, if I'm watching the price action here in ES, I can instantly tell what's going on just by understanding that one concept. And what did I just say? What was the one? I'm going to move this out a little slower here so we can zoom out while we're doing this. What's the one concept? It's an auction. So in order for price to be going up, buyers have to be more aggressive than sellers, and vice versa. In order for price to be going down, sellers have to be more aggressive than buyers. And that's simply all there is to it. There are no big guys. There is no big money. There is no, guy that has inside story. There's no gaming news in advance because it was the level it was, January 31st on, 482 BC. In Mesopotamia, that's how technical indicators work, and it's all meaningless nonsense. It's not about more buyers or sellers. It's about who's more aggressive, Jonathan. There can be a lot of sellers that are wrong. So for example, you will frequently see a situation where we're at a price point, and if you take the tape out and have it show you every trade instead of just the blocks of 10 or more, watch what happens. You'll see a whole lot of little guys doing something like selling right here. There's a ton of one lot sales. And then you'll either see big blocks go by doing the same thing, or you'll see it go exactly the opposite way against all those trades. And that's how you know whether it's truly auction behavior or it's just simply back and forth. And this is an important point. So that's why when I look at ES, and I vary the size that I am filtering by, but I try to do it so that it just slows the tape down enough that I can see recent places where people that are trading 10 lots or more are coming into the market. So right now I just reset that, and the 80 and a quarter. Okay. So that's a place somebody just sold and now somebody bought. And so when I see that, it's rainbowy at 80 and a quarter. And that's all that matters to me. Everything else with respect to the blocks isn't really important. So, the idea that there's little guys or big guys or more buyers than sellers, it's the result of what the buyers are selling or sellers are doing that matters. That's all that matters. And oftentimes, if you're just watching the cumulative delta instead of the bar by bar delta, this happened a bunch of times last week. The cumulative delta was like massively negative and we would be going up, or massively positive and we were going down. And under these conditions, it's just too complicated. There's too many variables to try to figure out why that could be. So again, let's go back to the course material. Stop doing that. It doesn't give you any advantage. So, I just don't know enough ways to keep saying, you guys can rephrase the questions different ways, but the answer is always the same. None of that matters. All that matters is which way price is going and how aggressively. And then when we get to an inflection point, in other words, a point where there's a debate, and that's a good way to look at it. When we get to a price debate, what's happening? Who's winning? And who's winning more aggressively? Sometimes it just goes back and forth. And that's what we've called in price action ebb and flow. And I'm coming back to that. That's a big chunk of our material today. So again, it's really important, not to think in terms of trends or think in terms of previous levels of support and resistance. Remember, all charts are wrong. You can build a chart that will support any statement, any hypothesis. You can say, oh, there's support at XYZ price, and if we get there, it's a good buy. I can make a chart that says the exact opposite and also proves that exact case. With two charts, I could do that, which is exactly why that information is completely meaningless to a trader. It's great for gurus. They sell a lot of that stuff, but is it useful to make money and to take money out of the market? No, it has no value whatsoever for that. Okay, so what's useful? Again, the only thing that matters is the order flow. What's going on with the auction and what's the result of that? And the only mentality that makes sense is this. You have to treat everything as a scalp. If you're a swing trader and you're looking to get in on, the lows now in Apple or, whatever stock, and you think you're going to hold it for 6 months, you still have to get a good entry. So you still have to think of that trade as being a trade that you're going to do just right now. And then if it turns out you're right and you get a good entry, then you don't have to wait for it to work or wait for it to be right. It will, and then you have an opportunity to put a stop under it and let it run or add to it or all those other things. So this is the kind of approach you need to have if you're going to be successful. Thinking in terms of any static levels or any magic indicators giving you signals or any services like Price Squawk or Trading News or Financial Juice or whoever, you know, giving you some sort of edge that some other guy doesn't have, you're fooling yourself. You're completely you're kidding yourself. It just doesn't exist, you know. And until you get that into your head, it just won't matter. Anything else we say. Okay, so here's our agenda for today. And, you know, this is just a summary of what I just said about linear thinking and, you know, prices going sideways. No, they don't. This is all review. I want to get to what we're actually doing today because this is the meat and it's a really important session because you guys, number one, you guys are coming from a lot of different levels of experience and a lot of different levels of training and education as a trader. So different parts of the material I'm presenting will be relevant to you at different times and will be relevant to each of you differently. And that sounds like a lot of mumbo jumbo, but if you ask any of the people here since the workshop in the fall of last year, they'll tell you that is not mumbo jumbo. It's really true. And so what I encourage you to do, you know, some of you said, well, why should I come live today? I don't understand any of this stuff. Maybe I should just go watch the videos and then I'll watch this video. What will happen, you'll find over time with this kind of material, and this goes into this Art of Learning book, and that's why I push that book so hard. It's not about trading, it's about chess and Tai Chi, but it's more importantly about teaching yourself to learn. Many of you don't know how to learn. And that doesn't matter, you know, if you have a PhD, you may still not understand how to learn. In fact, the worst learners I've ever met are accomplished physicians, you know, MDs, because they're so knowledgeable and they're so heavily trained in their field of expertise that they just assume that they're smart and competent in other fields that they're not. So they make the hardest people to teach trading to. So the point here is, and I'm going to a question that Michael, who I believe is here, yeah, there you are, Michael Spillman, asked me about getting entries and exits right when trading on the Dome. And I'm going to show you a bunch of examples, and hopefully some of that will make sense. But before we go to that, I just want to really emphasize this point that for every one of you, every element of the material that I'm talking about will be relevant in a different way. And there's two things you have to trust here for this process to work for you. Number one, you have to trust the people that are teaching you, myself, Lee, Amy, any of the other motleys from the workshop that you've been exchanging messages with or reading their posts. You just have to understand that, you know, it's not like we're paying 50 people here to all mislead you, you know, we're all doing something similar and yet we're all doing very different things. And we're doing this at the same time. And there's a synergy, a gestalt to that is really, you know, hard to understand if you're just not familiar with that idea. So, you know, give that a lot of time to sink in, and I'm talking about months. And you know, watch a video and a concept won't make any sense at all, and then you'll watch it again 2 weeks later and it'll be like, oh gosh, I get it. And I know many of you have had this experience. Half of the people in this room right now have shared that experience. So I'm just reminding you of the critical nature of that. Okay, having said that, I'm going to come back to your question, Michael, in a moment, Michael Spillman. But before I do that, let's just look at our agenda today. Number one, charts are crossed out. Charts are irrelevant. And they only have a value for context, and that's later on. Now, the TA, what am I talking about there? Not, you know, boobs and, no, not that one. No, we're talking about technical analysis, okay? So if you go back to the process that I refer to a lot, and I'm gonna spend a lot of time on this at the end of the session and throughout this session, but you've heard all of us talking about our processes, and this is mine. And part of all of our processes are playbooks, and playbooks are simply composed of setups. And setups are like the open 5A or the first hour high and low or HMOMO. And you hear us babbling about that. There's channels for each of the setups in the Slack. If you're new to the Slack, if you look on the left-hand side, those are the channels. And setups, then underscore JM is my initials, and then the name of my setup. We will be filling this in more in the next 2 weeks. And Lee is LH, and he's going to be doing a whole series on his setups. That's coming up in April. So there will be more information on what they all individually mean. But the idea is that, you know, it's like a football. If you play football, you have a playbook. Well, this is the playbook. And, you know, it's like a quarterback sneak, all right? The open 5A is the quarterback sneak of trading, all right? So to put all these pieces together, you need to understand the structure that I have up on this slide and how those pieces fit together. And where did my slide? There it is. So when I say technical analysis only in the zoom out for context perspective, this is what I'm referring to right here. That in order to understand the context of the market, I need to look at the technical picture, you know, and that's this view, you know, what's the day before, what's today, what do the volume profiles look like? You know, this was a double distribution and a really sloppy one. We came up really strongly. We held at the highs for a while. Then we came down really aggressively and closed kind of right in the middle between, you know, the open 5 and the open 60 high. Not an uncommon place to close, by the way. And then, you know, overnight we had ebb and flow, ebb and flow, ebb and flow. By the way, if you don't know what ebb and flow looks like, that's it. We're going to come back to that in a minute. Then we had a breakout, you know, they were probably just pushing the shorts out again. Who knows? Some, yeah, a way to David's question. If there's so many people unemployed, why would anybody buy? Well, they would do that because exactly people think that like David, and there's a chance to catch them short. And that's probably how we got up here. And now what's going to happen next? Who knows? Who cares? Go with what's going to happen next and wait for it to happen. Don't predict it with your indicators because they will be wrong. So that is the moral of the story for item number 1, which gets us to item number 2, which is what we've been talking about throughout the boot camp. It's really important for this LRC dome chart stuff, for any of this to make sense, you have to understand that price action predominantly falls into one of 3 kinds of behaviors. And if I bring up a 15-second chart just for fun, I can see exaggerated versions of each. So let me show you a few, okay? This is what ebb and flow looks like. Doesn't matter where we are. It doesn't matter it's the high of the day or the first hour high or yada, yada, yada. It's a behavior. Ebb and flow is a behavior. And okay, I'm going to pause for a second because Alex, yes, that could be true. But again, it doesn't matter. Don't think about whether the Fed will do this or will do that. Just go with what's happening and don't worry about it. That's the right answer. Okay, so anyway, back here again. So the ebb and flow always looks the same. It's pretty clear. It's usually about a 4-point, an 8 tick, 2, 3, 4 point range, you know, somewhere between 2 and 4 points, or, you know, 8 and 16 ticks, depending on how volatile we are. But it follows a real tight range like that. That is exactly what ebb and flow looks like. And it can occur in any time of the day or night. You know, it looks a little different at night. This is ebb and flow at night, and the volume's lower. So it tends to be a little thinner, but it's still, you know, pretty obvious. That there's no trend, and that, you know, some buyers come in and they trap some guys and then they sell and then they buy, and, you know, it's pretty predictable stuff if you just look at it in the form of ranges. So if you were looking at this behavior on an LRC, it would look pretty predictable, and the ranges would get pretty predictable. So let's go back to, you know, kind of letting it. So, you know, ebb and flow, ebb and flow, ebb and flow. Okay. Then we kind of broke a little bit away. So this right here was a tiny bit of price discovery. Okay. What that did was we had a range going, and then for a split second there, the buyers and sellers who were playing this range no longer agreed. So we had a price discovery event. We left the range. And this is very common where we extend a range by a tiny bit. And I showed you in the Slack what that looks like. It's in the Bootcamp channel. I posted a couple of pictures of that. It'll be, you know, one end of one's the fast LRC pushing the edge of the other one with a little bit of volume. That's what that would have looked like to the downside. And then, you know, whether that snaps back or not, it depends, but we did. So we're back in the same range behavior. And the LRC right now is telling you that the ranges are somewhere between 84 and, you know, I'd look at this and probably say it's more like 86 and, you know, 70. So that's a pretty good size range. That's the problem with our current volatility. You know, normally it would be much tighter than that under quote unquote normal conditions. Okay, so let's move to the next one. Price discovery. When price discovery is really aggressive, okay, forget, Michael, the things that you have been taught or think you've been taught about stuff like stop running. Stop running is a result of price action. It's not a kind of price action. Again, that's Furu stuff. If we get to an inflection point and there are traders that are on the wrong side of that inflection point, you will see an event that looks like a stop run, and that's simply the fact that those guys are off sides. It's not like, again, that what the Furus are dishing out that, oh, look for them to do a stop run here, you know, and that kind of stuff. So no, not exactly. Price discovery is really obvious. The best places to find it are right at the beginnings of regular trading hours. So here's a really good example of price discovery right here. We had some HMOMO, but there was no clear direction in there. And if you zoom in even faster on that opening 5-minute range, and this is a little quirk of Ninja. Give me a second for this to populate. Well, wait a minute, where'd the opening 5 range go? Ninja, for some reason, will make indicators disappear, and sometimes you just have to adjust the number of days you're looking at. So, you know, instead of 3, if I make it 5 or whatever, it will fix that. And there it is. So now our opening 5 is back. That's nothing wrong with the indicator. They all do that. It's a quirk with how NinjaTrader feeds bar by bar data to an indicator. And so, you know, if you ever see that, just change your interval, and it'll fix it. We're gonna talk about HMOMO, and we're gonna talk about price discovery. Osman, it's very simple to understand. HMOMO is nothing more than price discovery in one direction. If you think about the definition, price discovery means that traders do not agree on price. So they're battling it back and forth, but they don't agree on price in both directions. So this is very clearly price discovery here. And except for that little chunk of buying at the beginning, there's no bias right at that chunk. So for example, if I were to move the interval, well, hold on, it's harder to do here. Let's just assume that all we saw was right here. It's going to mess the chart up too much if I try to do it. Let's just assume we only saw this bar. So the rest of this hadn't happened yet. You know, that would look like aggressive buying, but then it got sold and it just couldn't get anywhere. So if I was just looking at this chunk of time, I would have labeled that price discovery, okay? And as it kind of went up, it was still price discovery until it got right here. And then if you were watching the tape, this would have become high Momo, because very easily, you know, it was 50K up, 10K down, 48K up, 25K down, 33 up, 33 down. So the momentum was dribbling there. And in fact, that's where the momentum in. So do you see the difference? This was price discovery. It always goes both ways. Momentum, high momentum, is aggressive volume that's every pullback is getting bought, and the pullbacks are fractional to the aggressive moves up. That HMOMO, price discovery, is that in both directions in a fairly tight range, or sometimes it's not a tight. You know, we've had a couple of days where price discovery went on over 200 points, you know, and the inside bid and ask were 8 ticks apart, you know, and that happens too. So, okay. So do you understand my point there, Michael, about stop running? And, you know, you could label this right here, this move right here, as stops running, but that's not what happened. It was guys that were on the wrong side that shorted this that just realized they were off sides and they covered. And you know, and then of course the momentum players joining the move. So you never know whether it's stops or it's new entries and new trades. And again, it really doesn't matter. It's more about reading what's actually happening than trying to assign a reason to it. Does that make sense, Michael? I hope, Michael Spillman. Okay, let me move on to back to our agenda, and I'll watch for your answer, and I'll keep an eye on further questions. But it's important on this session. Cool, thank you, Michael. Osmond, do you understand that answer too? Because I was also answering your question. So let me make sure we got everybody here. Cool. All right. Great. All right. So let's see. Did you have a question, Jack Jensen, or did we already cover it? Or I see a couple of you chatting. If it is, just restate it because I didn't see it. If you do, and I'm further down. Okay. I'm gonna really stay nailed and dialed in on the questions today, because you know, this is our last regular session, and I did the Q&A beforehand, regular session for the boot camp. And obviously, by definition, it's a boot camp. We're moving quickly. I get that. But so much of today is also about, you know, what you should do next, depending on where you are in your individual knowledge stream. How's that for an instructional design term? You like that? You like that, Michael? I see Michael Salgonic is here. I know him well from Microsoft. And we both have to drop our instructional design terminology periodically, so we sound like we know what we're talking about. Welcome, Michael. I'm glad you could join us. Anyway, back to the agenda here. So that's the different types of price action. And yeah, there's guys that have whole books on price action, but you know what? If you understand these three and when they're happening, and you know that they look different in different instruments and they look different at different times of the day, John Miller, I'm so glad that resonated for you. John and I had a chat right when he first joined the boot camp. He's like, you know, I'm an experienced trader. I really just want to supplement my skills. And I was like, please, 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 just don't do that, and just follow me on price action. And then, you know, if you want to go back and do that later, that'll be okay. And, you know, if you saw in the Slack, he posted how, you know, that was a game changer for him, and it is for everybody. So, you know, I really appreciate that resonated with you, and I know the rest of you it will if it hasn't yet. So, you know, just trust us, trust the process. So item 3 here, again, critical. So up here, you know, price charts are BS. I crossed them out. And, you know, on the previous slide, I said, you know, that all charts are wrong, but I also said that they are useful for context. So it's really important to understand that looking at a chart from the point of view of support and resistance, that's the nonsense point of view. Looking at a chart, however, to understand where the price action is in context of previous days and what, that is valuable information. And that's what we were doing when we were looking at the ledge up here. Or, you know, one of the things you see me do frequently in the Slack is I'll, you know, zoom out a bit and I'll say, you know, let's see, you know, 10 minutes for the last few days. And why am I doing this? And, you know, how is this different from what I was just looking at a minute ago? And the point is here, I'm looking at the opening range of the last couple of days. And the key from a technical point of view, and again, in this kind of condition, it's really only relevant for a couple of days at a time. But okay, so here's the opening range of that day. And the opening range of the next day was above it and kept above it. And then the opening range of the next day was in fact above those two and kept above it. And we're doing that again. So the market is trying to find, you know, some sort of, you know, don't use the word support or floor, they're all wrong. But, you know, it's trying to find, what's the right word? It's trying to find a consolidation. And the way you can see that, you know, and this would apply to a stock if you were looking at a stock as well. Although, you know, understand stocks trade very differently than futures. They're very different animals, and I won't go into all the reasons why. But okay, so you can see here, you know, this is those couple of days I'm talking about. So in the significance of the last 5 days, that looks like, well, we've found a bottom and we're trend up. But, you know, as I pointed out a minute ago, if you do a fib retracement, you know, we haven't even done what would qualify as a dead cat bounce yet. That would take us all the way up here. You know, so we're not even halfway to what the end of the world guys would say is a normal bounce in a dropping market. So you just can't imply trends here or support or resistance. You know, that stuff is all crap. But what isn't crap is that that's useful to just give your brain context. So that's what we're talking about here. And that's the value of a chart, you know, albeit limited value. And the trick in learning how to integrate that into your brain is to understand where it's useful and where it isn't. And I just gave you what I think is a pretty decent example of that. No. Okay. Nate's asking me, when I say chart, I just mean volume profile. No, when I say chart, that's a good question, by the way. So I'm going to define a few more terms in a minute. This is a dome or a depth and sales. Depth of the market or depth and sales is what this is called. This is called a reconstructed tape, the thing next to it. That's a meter of the tape. I'm going to go through all this in a minute. This is a footprint chart, and footprint charts are the most honest kinds of charts, but again, their accuracy depends on the interval, and you can make any interval make any case you want. So when I say all charts are useless and you can make one and prove any case, I mean normal, you know, reading them left to right kind of charts like this, you know, with bars or lines or candles, you know, or any of that stuff, or ranges. That's what I'm talking about. So that's what I mean with respect to context. That gives you an idea where recent inflection points were and how aggressive they were traded. And again, we don't consider that support and resistance. We consider it places where it was aggressively traded. And when we get there again, if we see that on the dome, then that's noteworthy. Okay, does that make sense? Nate, you know, I think it does. I know this is new stuff for you, so. Yeah, Amy's point is excellent. You know, these are all just tools, and you know, it's kind of like this. Let's say you want to build something, and we're going to come back to this in a minute with the item number 6. But let's say, you know, you want to build a piece of furniture. You could have a hand saw that, you know, one of those little micro saws that, you know, like looks like your finger pointing in one direction. You could have one of those, and you could probably build a chair or a table. You know, it wouldn't be the most efficient, but you could probably do it. On the other hand, if you were a master carpenter, you'd probably have a lot of different tools, you know, table saws and, you know, miter box saws and all these different things. And that would make you a better carpenter. So you would build better furniture. Well, that example applies completely here. The tools are the charts for context, the market, depth of market, the depth in sales, the trades going by, the footprint charts. All those are helping me execute my setups in my playbook. And that's all they're doing. There's nothing more there. So Nate, you're asking me if you see an LRC and it's confluent. Okay, so with an inflection point when it comes to okay, not really, but it's a gaming strength. Okay, so Nate, here's the right answer, and everybody stay with me on this answer. So what Nate is asking me is, he's saying, all right, if I, you know what, let me show you a static image, because this one's moving around and it won't make any sense. There's one of those up in the Slack, and it's in the Bootcamp channel. I put it up right before the last session as homework. Nobody did it, of course, because you guys never read anything I post. But anyway, what I said was, this is what range extension looks like. And when you see that, it's important with LRCs. It's important to understand what's going on under the covers. Okay, so this is what you're asking me about confluence. Yeah, that was an intentional ouch, Jack. So confluence was right here, okay? So what that's saying, remember what the LRCs are. You know, we've been looking at this back and forth. They're nothing more than statistical measures of recent price action. So the fast one is telling us that about 96% of the price action is falling in this range right here, this tight little range, and it's heading up very strongly. And it's telling you that 96% of the larger range price action, remember those are 20 and 40 bars of whatever this interval is. So that means there's a very high odds that this will be an inflection point, just based on what? Just based on purely the math of thinking in the bets. You're thinking in terms of statistics. And you're using, if you remember from the other, I don't have it in this deck, but if you look at the other deck, which is also posted in the Slack, there is that distribution, that volume distribution in a normal bell-shaped curve. And that's what you're seeing there, okay? So it is not potentially stronger. It's just a way to understand the statistics of that inflection point. Because what often happens, Nate, right after you see that example, you'll see this example where it did, whoops, that's slightly too big, hang on, where it did blow through there, but then it got sold, and it got sold aggressively. So you had both a really good short entry in order flow trading, as well as, a long entry and then a short. You just have to be nimble and stay frosty, there we go again, to catch that stuff. And if you're staring at the LRCs on the chart, you'll never see it. It'll go by too quickly, which is the reason why the moral of the whole story is to watch it here on the dome or the depth of market and depth in sales. Okay, so that's the answer. And if that doesn't make complete sense, it will at some point, and I need to move on to the next set of questions and the next couple of points. But if necessary, we can come back to that. So price action in context, okay? This is where the chart has some value, but to read that price action in terms of this, not context, but executing, okay? Whether your setup is an intraday swing trade, whether you're looking to buy Apple and keep it for 6 months, you need to understand what's going on real time, what the real time order flow is. Otherwise, you'll never get this part right. You will be subject to being manipulated by the they, them, algo boys, you know, all the BS that you think you're being manipulated by, when in fact you're being manipulated just by the price action because you don't know how to read it. And so this is where you're failing right here. And by the way, the vast majority of you in the room right now are somewhere in this equation. You know, if you're really new, you're probably more up here somewhere and you're still trying to figure out what I'm talking about there. But the vast majority of you with any experience coming in, this is where you are. And that's why the drills are so important. That's why we emphasize them so much. And that's why you understanding that next steps for everybody is item 6. You have to understand what this means, or you won't get out of this boot camp what the true golden nuggets, the true value of this are. Okay, so let's go through those things and then we'll come back for questions. And let me see, there's a few up here. Yes, the way Amy worded it is perfect. And questions can be off track, Jonathan, that's fine. If they are, I just won't take them. Or I'll sick Amy or somebody on you privately. So your question, I think you're trading via mouse clicks. Yes, I am, and we covered that in the last session. Listen to the recording from the previous session. I am much, much better on a mouse. Some people like keyboards, and we had a lengthy discussion about this in the last Q&A. Okay, Alex, and shortcuts and all that. Alex, if I understand correctly, it shows the size of the, that's by the way why we tell you show up live and listen to recordings as fast as you can. And you know, it's cool to ask a question we've already covered. I don't have a problem with that, but that just shows that, you know, you're thinking on the right track and the answers are there. You just have to go get them. Okay, Mike Burke, as a newbie, are the drill exercises the place to start? Absolutely. And that's why we created the drill channel, which is in the Slack, cleverly named, wait for it, drills. Okay, can't miss it. I continue to be stunned when people tell me they can't find things in the Slack, or, you know, the Slack isn't well organized. Somebody told me they couldn't find the Bootcamp channel. You know, I don't understand that. The three of us that are helping run this don't understand that. You know, all we can conclude is that you're just not applying yourself to understanding how Slack works, and you can't do that and survive here and learn anything. You have to learn. Slack is a very simple thread-oriented index. That's really all it is. So anyway, that's where drills are. And there's a bunch of them there. There's videos on them. You know, whenever you join a channel new, always scroll backwards and, you know, you'll see a bunch of stuff. Don't just jump in and start asking questions. 90% of the time, the answers are back in the channel somewhere. But always feel free to ask questions. That's why we're here. Okay, so let's see. So that's for Jonathan. Nate asks, in terms of entry using order flow, what's the truest data? How do you enter for a swing trade? For example, if you wanted to buy stocks during this dip. order flow works on stocks, Nate, but it works differently. Because there are all kinds of other things that go on in stocks, dark pools, off the books trades, exchanges for institutions. The bottom line is you have to look at the order flow kind of on a day-by-day basis, and that's just so different than what we do. It would be an entirely different Slack and a different TRD. None of us are aggressive stock traders, and those of us that are, use our own methodologies for it. So the short answer to your question is, if you really want to be a professional trader, the place to do it from every point of view is in the futures. So, leave the stocks alone. SPY is an ETF, and it's worse. The order flow is worse on ETFs than even stocks. I'm much better off trading micro futures if you want to learn the game, Joe. You're welcome, Nate. Okay, and the reason's very simple. Futures markets are pure. When I execute a trade, I'm selling to the guy who's buying from me. There's nobody in the middle. It's, people are advertising, their bids and their asks. And, basically they're literally, standing around the ring saying, I'll buy at 67 and this guy's, I'll sell 68. That's what people are doing. And, if I throw an order here, I'm saying, okay, I'll buy at 63. And you can see I'm number 54 in line. So if we get down there and trade, 53 have to trade before I'm going to get one. And because of the way orders are filled, that might not even get me filled, but on the other hand, if I just hit a market order, I'll be in the market just like that. And I just took a one tick winner there, picked up a $10 bill, as we say. So, okay, back to the agenda. Where are we on time? 10, okay, we're good. So the only way any of you will benefit from this stuff after this workshop ends, which is in about 30 minutes, will be to learn how to incorporate this into what it is that you do. And it really doesn't matter if that's stocks or ETFs or futures or options. The idea of a process is where you need to start. And if you don't think you need to make it this specific and this granular, there's 90 people in this particular Slack that'll tell you why you're wrong. And if you ask any professional trader, the most important thing that they have in their world, they will not tell you it's a platform or an indicator or any tool. They will tell you it's their process. So you must understand the idea of a process. And in order to do that, you must understand this hierarchy, that a process is kind of the top end of it. It's the big picture. It's this entire thing. What's my mission? When I get out of bed in the morning, I first have to just determine if I can function, because there's no manager watching me saying, you drank too much last night, go home. That doesn't exist. You have to do that for yourself. Once you clear that hurdle, you have to go through and understand what's going on in the market and what's going on with the order flow structure before you can then move to certain times of the day and certain instruments where you have an edge, in other words, a setup that if you execute it consistently that it will make money. And that sequence and those things are how a professional trader trades the market. Doesn't matter what market it is, doesn't matter whether it's stocks or futures or anything else, but that is the process that is used. I do not know any professional traders, without exception, that don't do that. But, how do you hear about this on Twitter and in the Furu world and the guys selling you $5,000 indicators? No. They tell you they have a magic sequence, step 1 and then confirmation is step 2 and then you entry and your target is this and your stop is that. And that's just nonsense. It doesn't work like that. You need a playbook of those things. You need to understand that they're different at different times of the day. You need to understand that they act differently under different market conditions. You need to understand all of those things. And then once you understand all that, then you're in a position to use this information that order flow is giving you, and not before that. It's really critical that you understand what I'm saying here and why that's so important. And that was kind of the idea behind the books that we recommended for this particular boot camp. You know, these three on the left, again, you know, all the ones, Stettlemaier ones or the Dalton ones, these are about volume profiles, and they're about market profiles. And so understanding what auction structure means. So when I say auction structure right here, what is that? If you don't get that, you will never consistently make money in the markets. You just won't. You know, I don't care how many magic indicators you have. I will bet a significant chunk of your net worth that you'll never increase it unless you learn how to read auction structure. So once you've done that, then you need to learn to think in odds and bets, and that's just statistics, and that's what the LRCs are about. And you know, blinks, that's about teaching yourself, and drills, and you know, that's what that idea is. And Moneyball is a fun example of how statistics work. Trade's about to happen again. You know, springs and up thrusts as a good edge tool. Tape reading reinforces all these things. I'm trying to give you kind of a mental how to learn this stuff framework. And assuming that, you know, most of you have this part, at least, you know, if you're not skilled at it, you understand it. Most of you, I think, understand this distinction right here. I'm going to talk about these three items here in a second. Drills are the only way you will ever get at the distinction between 4. And if you don't do 6 day in and day out, you'll never consistently make money over years. You know, you might have a good year, and then the market will change, and whatever you're doing will stop working, and you know, then you'll be dead in the water until you understand this. And usually what people do at that stage is they go looking for another magic indicator, or they go hire a new guru to teach them something they think they don't know. When the bottom line is all of the things you don't know fall into these 6 items. It's really that simple, you know. Anyway, so what are these things real quickly? You know, that's the last part I want to cover. Then I'll just take open questions, and we'll talk about, you know, how this might work for you guys individually. That's funny. How generous to wager out your net worth. That is my way of showing you how confident I am that if that you're doing, I have never, you know, I've been doing this 47 years. I've never met a trader who went from one guru to the other, buying indicators, buying training, who was profitable for more than 12 or 18 months at a time, because they simply just understand that market work that way, and that all they're doing is, you know, getting something that's reading price action under one set of conditions. And so, you know, it's a sucker's bet. You can't lose it. You know, it's like I have a royal straight flush with my pocket cards, and you know, you're over there on the other side with the, you know, a boat full house, and you're betting against me. You can't win. Okay, yeah. So anyway, so it's critical that you get this idea down, and start putting yourself on that path. And you know, just kind of, that's what we're about. That's what TRG is about. And that, you know, I want to just throw up our website real quick. You know, for those of you that haven't dived into the library, you really need to, because there's just so much great material that will reinforce all of this. And, you know, Lee's stuff, if you haven't gotten into some of Lee's clinics on price, how prices move, or unfinished business, you know, that, or Delta, that will help fill out your knowledge. But again, I strongly encourage you to start here with the workshop. And yeah, I know there's 30 videos there, but everyone in the room that's gone through them will tell you that's why they get this stuff, is because they're just going through it step by step, and over time it makes sense. All right, so the last thing I want to do about this particular thing, and I'll also take questions, is just give you a couple quick examples on how you can just game you know, LRC to dome and depth of market. And remember, I said I would explain what these different tools are. If you have a dome, you know, just in Ninja or whatever, and you're not using Jigsaw, or you're not using Sierra, and you're not seeing orders get filled, you're only seeing orders, then that's useless. That's not what we're talking about here. You need a dome, or actually the real name for this is depth and sales. You need to be able to see this, whether you're trading a stock or futures or anything else, because that's what's telling you the real-time order flow. And without that information, none of this works. So you have to have a tool that gives you that information. The normal dome, you know, for example, that comes in Ninja, doesn't do that. So, you know, that just, you need someone. Sierra's got a decent one. Lee has created a really nice template that looks kind of like mine. You know, the idea is to be able to read the momentum and where the high volume nodes are forming, and that's important information. Also, with respect to tapes, this is a reconstructed tape. That's a critical term. That is what this means, our tape. You do not want anything that's called time and sales, because time and sales is bullshit, okay? Not to put too sharp a point on it, but this is not time and sales. This is being reconstructed algorithmically using the CME algorithm. And that's how we know where trades are going by, whether they're on the bid or the ask, or in this case, we just see a bunch of them below. By the way, that, you know, you want to, that's downward momentum when guys are below what people are asking, or bidding rather. What that means is that somebody's selling more than are available, and so it's just heading down through the prices. And a really good explanation of that is Lee's video on why price moves and on Delta. But if you don't have that visibility, it's meaningless to you. So don't confuse time and sales with an R tape. You need a real reconstructed tape in whatever platform you're using to be able to see that. These are critical points for your toolbox, and I want to make sure you understand that. Again, you know, I'm platform agnostic. You know, Jigsaw, Sierra, Bookmap, you know, whatever you want to use. Just make sure it truly is an order flow platform, and that whatever you are seeing is actually reconstructed. You know, even MZPack, in order to get his footprints to work, that's why I stopped using him. You have to either reconstruct the tape or not. You can't do a footprint, for example, for unfinished business with the reconstructed tape turned on. It's either one or the other, which by definition makes no sense. Therefore, that tool is no longer of any value to me. So somebody had asked me about that a minute ago, or last session. Okay, I need to take a very deep breath, guys. I'm really tired. This has been a very rough couple of weeks for my 60-year-old body, but I'm not going away. Thank you, Lee. Lee just posted his stuff about data feeds and consolidated tapes and reconstructed tapes. And there's some good stuff about that in Jigsaw as well. So, you know, it's an important point to understand. If you don't want to understand it, you can just trust us on it, that a reconstructed tape that's a good one is critical. Okay, so here's what we're going to do. This was our agenda for today. I have finished it. So what I'm going to do really fast, is I am going to go back to our original agenda, and that was in our intro session. And a minute ago, I just mentioned this bell-shaped curve. So I just wanted to remind you what I was talking about. So if you combine the two LRCs, you know, you're basically, one of them is 2 standard deviations. So it's this 96%, and the other one is as well. So when we see this, okay, we're saying that this guy's 96% of the short term and this guy's 96% of the longer term. So we're just finding a way to game the odds. That's all. You know, it doesn't mean it won't go through that. That would be a black swan on this fast time frame statistically. But that, you know, I just showed you that can actually be a really meaningful trade signal. You just have to learn how to read it and what it means, and understand that it's nothing more than statistics. It's not a trading signal. You can use it as one, but you have to understand where it's working and where it's not, or it's meaningless. And, you know, again, the kind of natural example of this is that if this was a curve in a class, the C students would be the mean, the B students would be +1, the A's would be +2, you know, the nonsense, you know, A pluses, you know, that we have now. I just don't understand that, you know, how you can have better than a 4.0 average, but whatever, I'm old. Same thing going the other way, you know, that's the C, that's the D, that's the F. And, you know, these guys are out on the lawn smoking reefer. Okay, so you get the point. Our mission in doing this was about reprogramming you, and hopefully I got through that. You know, at least you understand now kind of this framework that the books offer you, and, you know, the idea of these last key points and how to put it together. I hope you've gotten to that point. You know, even if you're new to TRG, you have a whole month to poke yourself around, look at the different channels, ask questions. So, you know, our hope is that we can help you get on this path if you're not on it now. And if you're on it, you know, guys like David and Amy and, you know, are all at different levels of it. make friends with them and share results. You see that going on in our Slack, and we do that for a reason. People post their results. If they made money, they post it. If they lost money, they post it. And that's how we stay accountable to each other. And hang on, it's taking a second to load. But, and Naresh posts all kinds of cool questions and charts, and, everybody does that. And that's the idea, Amy just posted her journal not too long ago, I think, in Anything Goes. And Anita posted some really great results. And, Anita was one of those people that when she got here, 3-4 weeks ago, she was like, "You're not explaining the setups. I don't get the setups. Why won't you tell us about the setups?" And now she's one of our best scalpers, and it's brand new to her. So this is the point. This is stuff that is going to take some time to learn, and practice is critical. And you really need to understand that once you understand 3 and 4 and 2, 3 and 4, then it's all about practice and drills and working on your own particular playbook and your own process and what your setups are. So that's kind of my summary for the boot camp, putting it all together. And if I were you, based again on who you are and where you are in your journey, what makes sense. So take a deep breath, Jeff. Okay, let's see what questions we have. I'm going to scroll back. Yes, Jack Jensen, it is absolutely a hierarchy of needs. Anything that has to do with good, solid psychology applies here. Fear of missing out, and, fear of success, and fear of failure, and taking profits too quickly because you're not confident in the setup. That's all just psychology. And, remember that diagram on biases that I posted in Masters. Process Masters is where Lee and I post stuff. Look at these biases. You need to understand how and this isn't all of them, this is just a handful, but these are the ones that affect a lot of traders. And it's really important to learn how you as an individual respond to each of these things, because we're all human and we're all a little different, but these are all critical things to understand. So, I can't encourage you strongly enough to do that. All right, let me look for some more questions here. You do, Jonathan, have to unlearn. And that's why that first session, remember I kept talking about tabula rasa, tabula rasa. What is he talking about? What the heck is tabula? That is so critical. The art of learning, and that you have to be a blank slate. This is not something you'll learn thinking that, you're just going to come in and pick up some tips from Doc. You have to reframe your brain, because, the odds are that everything you've been taught will mislead you. Even the stuff you learned in high school that had nothing to do with trading. So, critical points. All right, I'm still going through questions here. You can't wrap your eye around the idea that the toss time in sales is upside down. The reason, Joe, is it's a consolidated tape. They can literally put the trades wherever they want, as long as they're accurate within a group. And there's almost no rules to how they do that. So it's not only meaningless, it's dangerous because it's misleading. So if you're using it, you're actually being misled. Okay. Let's see. Yeah, I know. That was an intentional joke about reefer. I'm actually too young for that joke, Brent. My older sister, who was born in 1950 something, she was the reefer madness age. By the time I was growing up, we already knew that was nonsense. But yeah, I just like to say that because the connotation, smoking reefer, running around in the park naked, having sex. That's what people think happens. Yeah, the gateway drug, exactly, right. I'm a classic example that is just so far from not true. Here's a guy that lived on opiates for 30 of his 60 years, prescribed and more or less taken as prescribed to manage chronic pain. And the minute I got smarter and started using food and herbs and THC and CBD and exercise and meditation, I was 100% better. So that just goes to show you that conventional wisdom is not wisdom. It never is. You have to be your own advocate. And that's true in life and trading and anything else. Okay, Anita asked, if we're trading the micros, would I look at the ES? Oh, Anita, you are getting so smart. And you're so new, and I love that. Absolutely. The micro is a derivative of ES, so you want to watch the tape for the big boy, the ES. Back in the day when we had this P contract, which was the one the ES is a mini of, it was $500 a tick instead of $50 a tick. I used to run a tape of the SP contract instead of the ES. So that was a perfect question. You are demonstrating how much you are learning by asking that question. So good for you. Everybody, kudos to Anita. Remember, she was the one that, I don't get the setups, damn it. You know, this is nonsense. You're not explaining it. I love you. This is perfect. I mean, you're making my day. Seeing you learn. I mean, again, it's the only reason I get out of bed many, many days. Okay, let's see. Other questions? Do we do a daily live trading room? No, we don't. And we don't do it for a very good reason, because those are furu bullshit. And I'm not picking on you, Michael, but that question, let me show you what we do and don't do in Trading Research Group, because it's critical to who we are. What we do not do is over here on the left. We do not call trades or price levels. I will not tell you that 25.50 is a good level, because that's nonsense. Two traders can execute the exact same trade, and one will make money and one won't. So, you know, that's just bullshit. And so are trading rooms where they do that. We're here to teach you to do this yourself, not to watch us do it. And remember, we will trade live. I do it all the time. I mean, go look at the library. You just look for the word live. That's all the times I've done it in front of everybody. So anytime you see the word live here, and there's dozens of them. So, you know, there's lots of examples of that, but you don't want to be anywhere where somebody is a quote unquote live trading room. That's just not the right way to learn. And Michael, I don't know how many of the videos you've watched, but I do it all the time. But I don't do it, look, you watch me, here's how you do it. What I do is I say, okay, here's the setup I'm executing. So again, you know, I need for you to understand and to get on this idea, you need fast forward through all the videos in the workshop from the fall, and then it will make sense to you. And then when I trade live, you'll get that, you know, that what parts apply to you and what parts don't apply, you know, the different bubbas, exactly what Maria's saying. You know, we all trade differently, but we learn from each other. And I learned by teaching, you know, the most, anybody who's a professional trainer will tell you that if you can't explain it to a 5-year-old, then you can't teach it. And that's why Michael Solganics is here. He's 5 years old. And no, I'm kidding. Mike was actually my boss at Microsoft. And Mike is one of the most skilled managers I've ever met. And as I said, he's not really a trader yet, although maybe at some point. But Mike is one of those people that can take a team of 13 people that are experts at what they do, the Microsoft Windows gurus, as we were called, and literally, you know, keep all those real high achiever, you know, type A personalities out of jail. He certainly did that for me. So anyway, I don't know. I don't know if you have a mic on, Michael. I'll put you on the spot if you want to just say hello. You don't have to do anything. You don't have to do that if you don't want to, but I'll unmute you if you do. Just tell me. And anyway, okay, so going forward, let's see. Back on our, you know, where we want to end up, which is here. And I really want to take questions about, you know, this and where you are. If you're not clear on that, that's where you can really use me. Thank you. Everyone, I've gotten good feedback on my Furu voice. My Furu voice is the one where I do like, it's my professional radio voice. I actually was a radio DJ when I was in college, and, you know, welcome to KCRW, The Tide, K-Tide, KTYD. So yeah, I have professional voice training, and what I do when I'm teaching is I don't use it. I use my passion as the good trainer, and, you know, I think that comes across. And when I'm making fun of things or telling you what not to do, I often resort to my Furu voice because it's very easy to recognize that what I'm saying right now is complete and total bullshit. Okay, so that's the Furu voice. Yeah, cat herding, my favorite video. All right, other questions. Let's see. Okay, let's see. Yes, when I yell at you, it's because I care. Look at my interaction with Blair about that and what he said about tough love, and I think you'll appreciate that. Yeah, look at Michael's comment. And I agree, I'm really difficult to manage. I mean, if you don't need a job and somebody asked you to do it as a favor to the company and you're really good at it, that's like the worst combination on the planet for a manager like Michael, because, I could tell him to fuck off and there was nothing he could do about it. And unfortunately, regretfully, I did that sometimes. I'm not easy to manage, which is why I don't take corporate jobs very often, but that one was a blast. Wasn't it, Michael? We had a good time, didn't we? Absolutely fun. Okay, so let's see. I got to show you guys a picture just of this, just so you get what our job was. If you look in, wow, where the heck is my mouse? Okay, let me just show you guys something real quickly. I think I stuck it on Facebook. I think it's on my personal feed. Give me 1 second. It's one of those things that popped up as a memory, and oh shoot, it was the Star Wars thing, and I think it was on my personal one, but I just got to show you this because it's such a good description of what our job was. 1 second, folks. Give me a second to put up new questions while I'm doing this. This is where I say what I think and not necessarily my corporate self. There's Enzo. Where is that thing? It should be about a week ago, and I thought if Facebook worked well, it would pop up easily, but I don't. Oh, I know what I could do. Hang on. Where's that thing where you can look at your memories? Oh. There it is. Okay. It should come up there. Bear with me a second, guys. It's not coming up. I don't know. Oh, well, did I put it up in surfing? Is that where I posted it? No, it had to be. I'm sorry, guys. Just put up questions. I want to find this picture because it's just so descriptive, but I can't remember where it was shared. And the search tools in Facebook, particularly for images, just totally suck. Let's see here. Okay, I see some good questions getting popped up. So go ahead and continue on that one that's coming up and any others. I will be back there in just a second. Oh, where is that? I've been posting lots of music, so. All right, I think we're getting close. Yeah, we're getting close. Now I remember this stuff. Okay, hang on a second, guys. I apologize, but this is a really fun picture and it does explain the point I'm trying to make with Michael here about what we did over there at Microsoft in our spare time. Oh, where the heck is it? Should be right before this hiking trip. Oh, dude. God, I imagine the guys like Facebook and Zoom must just be getting crushed with bandwidth. And I'm going to give this about another 2 seconds. And if I don't see it, I'm going to just post it in the group later because I don't know where it went, but I'm not seeing it. All right, we are going to abandon that. If something's not working and you can't find something, move on. All right. So, questions. Let's see. I lost sound. Okay. Do you recommend as a target for, okay. Where was that question? Hang on. Which question are you referring to, Brent? I'm scrolling back. You said, okay. What do I recommend as a target for skips? Oh, if I'm scalping the MES. Okay. You mean, for example, if I was doing like scalp drills? Yeah. Okay. Anything that's profitable. Remember I posted a whole bunch of trades last session that I did in the micro account, and some of them made $1 or $2, and the commission's 80 cents. So that's my definition. But generally I like 3-4 ticks is a good thing. You can make money with one if you're paying low enough commissions. But I don't encourage that. They move around a little bit more, and that's why if you look at the last video, we also talked about why the micros are a little easier to trade with 2 or 3 contracts than just trying to do with one, because getting one right with the amount of bouncing back and forth it does is tricky. Here, I'll bring it up so we can watch it, and you'll see what I mean. That'll be a good example. It's going to take it a second to populate that data. Okay, Michael, you once asked me if I could train a few store associates. 2 hours later, I had scheduled a meeting for hundreds of employees. Yep, that's true. That was kind of, and whether Microsoft wanted us to do that or not, then I'd go back to Mike and I'd say, okay, Mike, I need you to go get me a budget for this. And he'd be like, but he would do it. He'd come back with money. Yeah, let me show you. There's some pictures. I remember how I might be able to find it. In Action is a folder that the thing I'm looking for is in, I think. If any of like my porn links or anything come up here, just ignore them. Jeff Mayhem in Action. There they are. Okay, this is the you'll dig this, Mike. This is some examples of the stuff. Oh, let's just grab this whole thing and unzip it. Hang on. Okay, yeah, here's the ones I was looking for. So this was Michael got us. These were Xbox promotions, and they were lightsabers basically. So we did this. We would rent like a large movie theater and serve pizzas and stuff, and then we'd put on a big show and we'd give away prizes. You can see there's an Xbox and a Kinect over there and a TV and whatnot. And so this is basically what we did. And so here I was defending the Microsoft and Hewlett Packard folks against the evil fruit company Sith Empire. So that's what we did. It was a blast. You see my little Microsoft shirt and whatnot. So anyway, Mike and I had fun, and Mike is an excellent manager. Maybe we can teach him to trade. Okay, some more questions here. Let's see, Koika, great questions. There's a couple of good ones. Okay, can I review of timeline learning the dome from chart? That is a great question. Okay, so what he's basically asking me from the time I started doing this, and I posted it kind of in the first thing about my own journey, what did that look like? And let me just review that one more time. That's a really, really good question. And the one Morris just asked, another good one. And again, guys, as long as I don't drop from exhaustion, I'll stay here and answer questions as long as you got them. So we'll keep it up. So first of all, that one, I've been trading since I was 13, as you all, it's back in here. This is my trading experience history. If you just need a review, that's me. So I've been doing this a long time on a lot of different levels. So I know a lot of ways that don't work. It's very much the knowing what you don't know and then filling in those gaps. And so what this was for me, I was at step one in about 2014 with respect to order flow. And I started working out this stuff once I licensed Jigsaw, and I started, doing John Grady webinars and Axia Future webinars and Pete Davies stuff and Jigsaw. And none of that really worked for me, which is why I worked out the thing with the LRCs and statistics. None of the ways that it was being taught, I'd get little bits and pieces, but I just couldn't put it together. And so I started doing the LRC stuff in 2015. I tried to teach it to some people in 2016. 3 of them succeeded, 1 failed miserably. And I went back to look at the one that failed miserably, and it had a lot to do with preconceived notions. So in 2017, I tried again with 10 more people, and 8 out of those 10 got it. And again, the 2 that didn't, it was about preconceived notions. So the next thing that happened was I started posting about it in Surfing the Markets, and many of you know me from there. And that's when I started trying to teach it, because it was helping me understand it. I mean, and if you go back, if you just search the word LRC, Kuika, in here, you'll see posts from 2015, me working with indicators still and trying to work out, how LRCs would be accurate and how they'd be accurate in different instruments. There's an LRC and a couple of different kinds of price action instruments and support and resistance. All the stuff I'm telling you doesn't work because I tried it. And I tested it over tens of thousands of trades, and it doesn't work. So it's that simple. And so the answer is, that got me into like here and teaching it and drills. And I'll be honest, I was good at it, but I wasn't really focused on which pieces were working and which weren't working until I did the workshop last fall. And it really forced me to understand what I was saying, and for a good example of that is, the Open 5 used to be one setup. And the first day I tried to teach it, I realized just by the questions that you guys were asking me that there was an Open 5A and an Open 5B. It was two different trades. It was respecting the same range, but it was doing it completely differently. And I learned that from you guys. And, I learned that here by teaching that to you, in November of last year. So it's critical to understand that you're going to be on this path between 3, 4, 5, 6, 3, 4, 5, 6, wash, rinse, repeat. You're going to do that for a while. And also this document, which is up in the Slack under Masters as well, is equally critical. Understanding that every instrument's different and the context of them is critical, and that you find setups before you go look at the order flow in the chart, not the other way around. You're looking for conditions under which setups will occur, and then you're going to get in there and you're either going to make money a little bit, make a lot, or have a small loss, but nothing else is acceptable. And then you start over and you reset your brain completely with no bias. So that's how a good trader trades. And that for me was a process that I've been in, just with purely respect to price action in order flow, I've been doing since 2014. And that's, that brings you current up to where I am right now. And the skill you've seen when I do it live. And if you haven't seen that, go back and watch any of the live videos. I've traded live at least 25 times. And I've made money, I've lost money. Most of the times I've made money, but there's a couple times I had just colossally bad days. There was a day I dropped 3,000 of real money just by literally being on the wrong side for one opening 5. And I recognized it and I scalped back to break even the rest of the day. And that's all up there live. So anyway, okay, let's see. Some more questions. I hope that answered your question, Kawika. This is such a critical thing to understand and not to try to elaborate on and not to try to make more complicated. As long as you can get down to the point where you can identify those 3 kinds of price action, you'll be able to execute against whatever setups you have, assuming they're legitimate setups, which, a couple of guys learned, like that was one of Blair's learning curves last year. He was trying to use some setup from what's his face, a guy I know pretty well, actually. What's his name? I don't know him personally, but I know his teaching. Barry from E-mini, E-mini, whatever he calls his site. It's a good site, actually. It was just really dated. No, it's, oh, shoot. Let me think for a second. E-mini, I think he's paying the most for the first hit. If you put it up, he's the first paid one, but no, shit, E-mini was, oh God, I'm really tired. I'm having trouble even remembering the first name I just told you was his. What did I say his first name was? Yeah, Aussie guy, exactly. Oh gosh, it's relevant. E-mini watch, there he is, that guy. Aussie guy, again, I forget his name, Barry Taylor. Yeah, his stuff. That was his indicators I was using. And even after going through the workshop, Blair still tried to use that stuff. And, that's what he's talking about with the tough love. I just beat him up in one-on-one chat one day and said, will you just get that crap off your charts and just listen and watch and be a blank slate? And, now he's making $500, $600, $700 every morning with the Open 5A. And you can see his post yourself. Yep, Barry, that's it, Barry Taylor. Great guy. But, what he's doing is just, it's circa 2008. It's not current stuff. Barry understands order flow. He's just still making money selling, last year's car models, and that's fine. People want to buy it. He knows what he's doing. He doesn't need to use his own tools. So there you go. All right. Let's see other questions. Jack, what prompted me to work at Microsoft? Oh, I was kind of recruited for a little program that appealed to me, the one that Michael and I were talking about. It was a blast. We had fun. We got to pretty much do our own thing. That was the beauty of having a skilled manager like Michael. He took a team of hotshot type A's and just let them do their thing. And that's the sign of a good manager. And then, of course, Microsoft tried to control it and, make it bigger and add more layers of management. And it was a colossal disaster. So, I moved on back to venture capital and trading. Mike works for Citicorp in a sales vice president role. And that's exactly what they do. They're legendary for it. And look, I started at IBM. We invented it at IBM. So, just seeing Microsoft do it, and the fun, for me, and the headache for Mike, my manager, Michael Salganik here, was that, I would think nothing of just walking up to a vice president of Microsoft and telling him he was full of shit. A, because I sort of could, from an experience point of view, and B, I didn't need the job. So, what's he going to do, fire me? And, no, he's going to call Mike and scream at Mike. So, but you know what? I think in a lot of ways, we made our team better because we challenged the micromanagers, middle manager, nonsense guys. And the real beauty of it was the guy who was ultimately responsible, the director above the vice president, was a guy like me. He'd get up on the stage at a Microsoft event, with a couple of thousand of us trainers there, and the whole management team and all that. And he'd say fuck and shit. Who is that guy, Mike? What was his name? I forget his name. Yeah, as a blast shield, that's exactly what a good manager should be, Jonathan Van Kloot. You're absolutely right. I forget that guy at Microsoft, but he was such a good divisional GM because he just refused to play the corporate game, and he'd been there long enough. They couldn't fire him. He had a ton of equity. He was buddies with Bill and what's his face, the other guy that retired, the president, who I don't, Bomber, and it wasn't Paul. Jeans and a t-shirt, Michael. Who was that? Jeans and a t-shirt guy. It wasn't Paul. It was, anyway, I'll look it up, and I have a short video of him somewhere telling us that literally, here he is, like, imagine you're at a Microsoft event and they spend 2 days rolling out a training program and talking about the metrics and how it's going to be measured. And then at the breakout right before everyone goes on their airplane to fly home, he says, yeah, those metrics are all kind of bullshit, but we got to do them anyway. I mean, the kind of guy that could get away from, I can't recall his name either, but we both know who we're talking about. Anyway, all right, other questions on our topics. Morris asked me, thicker, slower markets, can they be traded in the same principle? Absolutely. They just evolve slower. And I remember a couple of people, I think Maria is one of them, and one or two others that came here thinking, well, the indexes move too quickly. I want to trade the treasuries instead. And then, after a few videos and us beating them up a little while, they realized that these are actually easier to trade because they move. The slow-moving instruments are the hardest ones to trade. You watch a guy like John Grady; he's really good at it, but he's in a scalp for like 2 or 3 hours. And as I've said before, I would need to keep a loaded gun on the desk. I would literally blow my head off. I just can't stay focused for that long, as you can probably imagine listening to me. Okay, so let's see, other questions. What made me stay in and persevere after big losing experience? Yeah, like losing 150 grand when I was 20 in the market, because I had, by the time I was in about 10 years, I was about 23, so we're talking about 1983. I started realizing that all the quote unquote conventional wisdom was just bullshit that the stockbrokers fed you so you would buy and sell stocks, and that's how they made money. And in those days, Amy, I don't know if you remember, but a round trip commission on 100 shares of stock was $500. It was ridiculous. These guys got really wealthy, and that's where the book, the only guys that are driving, Ferraris are the brokers. That's where that came from, and it's true. So, I realized either to become a broker, so I got a license, and then I realized, well, that was the wrong answer, or I had to just run my own money as a hedge fund. So I started working out how to do that, and I met some people that did it, and the first thing I realized was that they did exactly what the opposite of anything conventional wisdom was. And, they laughed every time they heard any of the trend is your friend, furu nonsense, or, support, resistance. They were just like, we eat that crap for breakfast, and then we drive our Ferrari to our yacht where we go and drink, Black Label while we laugh at you idiots. That literally is what they told me. I mean, not even trying to hide. And my first mentor was a New York Stock Exchange specialist. Again, you can Google what that is. And that was the first words out of his mouth. I said, what's the most important thing I can possibly learn? That was my question. He said that everything is about price discovery. It's an auction, contrary to what everyone else has told you. He said, and I'm the auctioneer. That's what a specialist is, literally. in the middle of every trade. I mean, he had a license to make money, to steal from people. You could put up an order for 100,000 IBM. He could legally buy it from you, raise the price, and then sell it. I mean, you know, that's the kind of stuff that a specialist can legally do, because his job is to make a market. So, you know, he said, number one, price discovery is the only thing that matters. And, you know, until you understand that it's an auction, nothing else is going to make sense. And then the second thing he told me is that absolutely every single piece of conventional wisdom is 180 degrees wrong. So he said, just take any one of those things, those, you know, wisdoms in the market that you hear people saying all the time. And he said, just literally turn them around and you'll be near the truth. The trend is your friend. Absolute bullshit. It's only your friend until it's over. So forget there's a trend and look at the order flow and go with the order flow. You know, the trend is misleading. That's why LRCs aren't trends. This is not an uptrend that just got broken. This is a statistical range that is being challenged by what looks like one large heavy seller, at least at the moment. You know, let's see if it goes anywhere. These large sudden moves tend to suddenly go the other way just as fast, unless there's a real good reason for them. And that's why I don't watch the news. By the time I go look for the reason, the trade's over. And right now, you know, there's a potentially great long scalp with low risk. And if it continues, you get short. That's all there is to it. You know, that's the setup right here on that corner. So, you know, I told you I'd show you some setups. That's a really good example. The 2 or 3 of you that asked me about that, you know, convergence of the 2 LRCs. One came down very aggressively, but it did it because of this block of selling right here, you know, that started right here. It sold, it tried to bounce, couldn't, sold, and then it just got crushed down. But what's going on down here? Is it still getting crushed down? Is that event over? That's the question you should be asking yourself. And the answer is yes, that event is over. It is no longer, in fact, it's a great long scalp. And that's why on a lot of down move days, you know, I'll post my trades and there'll be like 1,000 trades and they're all longs, because that's what I'm doing. I'm just finding inflection points and picking off 2, 3, 4 ticks really quickly, you know, with low risk. The stop is really clear and it's really close. So, you know, it's not brain surgery. And then the minute it leaves that area, you know, I'm right back in with the momentum. And that's why momentum tails are useful, which are these kind of highlight heat map kind of things right there. You're seeing a downward momentum tail and an up. That's built into Jigsaw, and I believe Lee is constructing something similar if he hasn't already. All right, other questions? Great questions so far, guys. Okay. Oh, yes. Amy is pointing out something that I say a lot, and it's pertinent to these questions. Very important to understand that something like oil or gold are commodities that are linked to a real thing. There actually is something called gold, and there is West Texas Intermediate crude oil, which means those will behave very, 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 very differently than things like the ES, which is an index, which is a derivative of the S&P 500, and that index itself is a derivative of the 500 stocks that make up the S&P 500. So basically, derivatives trade in a very different kind of personality, and they tend to stay correlated, which is why you want to watch the indexes as a group, and why you want to look at something like CL or GC individually, and you don't want to treat it like a derivative, because there is an actual thing behind that. And Lee does a good explanation of this in his Why Price Moves presentation, which is in the library. Thank you for pointing that out. That was a great reminder. Amy and Maria, okay. When or why do I reset? It has to do with what setup I'm looking for, Joseph. So, you know, when I click that and when I choose to just click the sides of it, and when I choose to reset that one and not the others, and when I just reset that one, it has to do with what I'm looking for at the moment. And that's, again, it's not a, there's another one of those little reminders to go walk if you're sitting too much, which I am, but I'll bear with it for a minute. Anyway, so the point is that it's about, remember, you know, you're still coming at it from the point of view that, you know, the setup is going to be told to you by the chart, and it's the other way around. So I'm looking for a setup in the order flow. that's what this means. And then when I think I've got one, then I'm going in and looking at the order flow to execute that setup. And therefore, that's the decision I'm making about resets and the tape I'm watching and the meters. It's all about this point here, which is a critical one to understand, that once I understand what I want to do and the setup I'm looking at, then the dome is about the execution. So those resets and whether I reset them all or just one or the other, whether I've got oil running next to the indexes or not, a lot of times you'll see I won't have these two domes up. Instead, I'll have this thing over here, or I won't have anything over there at all. That's another. If you want to make your setup more efficient, a quick way to do that, particularly if you're using the Ninja Bridge and Jigsaw, what I do is, I'll just show it to you real quick, is so let's just save this one and close it. And well, first, hang on one second before I do that. Hang on, I'm doing too many things at once. What I'm going to do here, I'm just getting rid of something else. Okay, so what I'm going to do here is I'm going to just open another one, which I often do at the open of regular market hours. And it's the one that's just the indexes. And so sometimes you'll see me just display that one. And then what I will do is I will get rid of the one with oil and gold, because I'm not trading them right now, so I don't really want to see it. So that looks like this. And in many ways, that's a lot less distracting, because I'm focused just on the instruments that are indexes, and they tend to move together, or if they're not, it's significant. And that way also, if I bring this chart up, it's not covering anything up. So there's a lot of different ways to kind of configure your workspace to optimally do what you're doing, and where you reset your domes and which domes you have up, and those are all components of that, and that's part of what we call your BUBBA. Whether your BUBBA is the setups, and your BUBBA is reading order flow, but it's also setting up your computer so that it corresponds to your life situation, where you're trading, how powerful your computer is, all that kind of stuff. How good of a technical person you are with respect to computers. If you're not good at being technical on computers, and we've been running into a lot of this with the newer folks coming into TRG in the last couple of weeks, we cannot emphasize strongly enough to all of you guys that you have to become expert in your platform. And that includes, whether it's Sierra Chart or Ninja and Jigsaw. Don't think that somebody's going to hand you a template and just say, here's how you do it, and whine at us about how hard it is to connect Jigsaw to Ninja with the bridge. If that's a challenge for you, you're in absolutely the wrong business. And we are the only guys on the planet that will tell you, we don't want your money as a member, because if you can't do that much, you're not going to succeed here and or anywhere. And it's right on our homepage. And I'll bring it back up because it's an important point. We don't, that anybody can come into this and become profitable right away and think that that's easy. You got to understand, this is like any other new business. If you opened a restaurant, or you opened a window cleaning service, or you opened a new location of a Best Buy in a new city, or a new Walmart, it always comes down to this. Most new businesses fail. And trading's no exception. So, this is not something you can come in with half-baked skills on a computer and use that computer to make money. I mean, just think about it. We're not being hard on you saying that. We're being honest with you. Something like Slack, if that's a challenge, then you may need to go ask yourself if this is for you. And, we're here to help you, and we want to help you, but, understand those are the kind of things you kind of have to work out yourself for your own good as a trader and as a business person. This is a business. Okay, other questions? I love your comment when you had your aha moment, Anita. That's how it works. For those of you that read what Anita just wrote, you won't be able to wrap your head around how the LRCs are working until you do. And then the moment you do, you'll like sit up in the middle of the night and you'll say, okay, I get it, and then you'll like text Lee or me or Amy, and that we call that an epiphany or an aha moment. And it's really fun when it happens, because you get it. That's what it is. But if you're not there yet, all I can do is tell you to stick with it, bear with it, it will come. Bill Brownell, that was him. Yes, good old Bill. Yeah, one day I said, I don't know if I ever told you this, Mike, but I asked him one day, you know, when on one of the breaks, I said, so Bill, what do you do? You know, what is the head of Microsoft Worldwide Retail? And at the time, his title was slightly different, but he said, the bullshit stops here. Literally, that was, you know, this is like a second from the CEO level executive. He was a lot of fun. I'll have to see where he is. I'll have to check it out, look him up, and buy him an adult beer, an adult beverage someday. All right, other questions. So Amy's saying the SPX is a basket. Yes, that's true. And that's why, okay, so look, the S&P 500 is a basket of 500 stocks, and they are weighted in different ways, and that creates an index. Therefore, that is a derivative. That's the definition of a derivative. So when I say that I've been trading derivatives since I was a kid, I started with options, and options are another form of derivative because an option is derived by the price of the underlying stock. So if you buy an option in Apple, you're buying the right to buy or sell that contract derived from the price of the underlying security. And so the S&P 500 is a derivative of those 500 stocks. Then the index, the SPX, is a derivative. And then the futures, which are not the cash price, but they are the future price based on whatever contract we're on, are another derivative. And then the micro is a derivative of the one that's the mini. So you get to the point where you're 4 or 5 derivatives away from the actual thing. And in the middle of the night, the equities aren't trading anyway. So we don't know what people currently think Apple's worth at midnight in California, no matter what. So the only pricing we have is order flow by the futures traders during the night and to be able to compare the indexes with each other. And that's why it's such a great tool. And that's why it's so different during regular trading hours, because we have more tools. We know what Apple's really trading at. We know what the advanced decline is. We know how many stocks are up and down, et cetera, et cetera. Hopefully that's all making sense. Okay, Nate, I keep hearing people saying order flow is only useful at inflection points or there can be noise. First of all, noise is order flow. So anytime you hear the word noise, you're talking to someone that doesn't understand order flow. Because the noise is the order flow. You know, that's the whole point. And these go, oh yeah, that's the same gurus that will tell you that you have to go to a longer term chart because the shorter term charts are too noisy. Nonsense. Noise is order flow. That's the whole point. And that's why that piece of conventional wisdom is so wrong. And if, like me, you're trained as a mathematician, it's the other way around, okay? If I have a trend, and the trend is based on 3 pieces of data, a beginning, and a middle, and an end, that trend is perfect. I can't make a better trend. Now, if I look at 300 pieces of data, I can fit a trend to that data, but respective of any one of those data points, it could be very, very far away from where I am right now because there's 300 of them. So literally, by definition in math, a shorter term is less noisy. And why the gurus continue to sell this, you know, short term is noisy garbage, I don't know. And why people continue to believe it, literally the math is just completely backwards. You know, anybody that has any sort of degree in mathematics, I mean, starting with high school algebra knows this. So that's the answer to your question, Nate. Now, in terms of pricing, you're starting a trading business? Or I guess I'm not sure. So what advice do you have for starting a business in terms of pricing? Charge as much as you possibly can get. What we're doing is different here. We're trying to build a community and we're intentionally giving up revenue. We could charge $4.99 and have fewer people and make more money, but we'd rather keep it almost free and teach more people. We've made a conscious decision that that's our mission here. So for us, it's different. But in general, you want to charge as much as you possibly can in any new business. And if you're telling me you're starting a trading business with your background, then I say you're really a furu. Okay, so I'm not sure what you're asking me exactly. Clarify if you can. Okay, let's see, Amy, exactly. Yeah, some people think Metallica is just noise. So look, the point about music is that all music isn't noise. What did I do in the first session? Remember, I put up Grandmaster Flash on YouTube, and one of the original hip hop songs. So and the musical artistry is beautiful in that, and it conforms the same way that Beethoven or Bach does. So all music follows mathematical patterns. It's just different people hear it differently, just like trading. Different people have different bubbas. It's you got to learn to hear your own music, but you can't. The mistake is you can't make the mistake that what some furu told you, that the cross of the MACD is music. It's not music. That's that's some top 40 hit by the Raspberries in 1975. It's just crap. Okay. All right. Other questions? Oh, a marketing business. Okay, well, marketing business, you always want to charge as much as you can. Yeah, that's all true. You let and you can talk to me privately if you want. I can put on my venture capital hat and my angel investor hat and answer that. In fact, Nate, why don't we do that? Contact me privately on Slack and I'll take this offline with you. Good instructor should. Okay, reading questions. Okay, I do not see any other questions except Kenneth, maybe. Okay, a better way to frame the question is, how from an order flow trading perspective does actual commodities trade? I thought I already answered that, but I'll try again. Kenneth, that's literally what I was just doing. Oil trades much more based on the fact that there's a fundamental market for it. So, and again, if you watch the video that Lee did, and it's hard to put in context now because we had such a crash, but back when oil was $60, okay, and the airlines were actually operating and they needed jet fuel, they go through thousands and thousands of barrels or contracts of it a minute. So when they come into the market to buy at 60, they might buy tens of contracts, and they often aren't very considerate of what the price is because they really don't care. For them, a few cents one way or the other doesn't really matter. So it's telling me I'm having a bandwidth issue here, so I'm going to shut some stuff down just to make sure we're okay here. So let's get rid of, we don't need that. Okay, so does that make sense? Do you get what I'm saying? So for something like gold, for example, gold tends to be really crazy at night when Asia opens, because there's a lot of Asians that love to speculate in gold. And there's also a lot of Middle Easterners that do. And oil the same way. I have a complete setup called the Midnight Oil Trade that's midnight California time, or 3 a.m. Eastern. And it totally is based on the fact that oil and gold will tend to come back to a balance of value after the little one contract speculators get off sides during the night. So that's the answer to your question with respect to those two, which I know well because I trade them. And with respect to the indexes, again, because they can't tie to actual value because the market isn't open, we don't know what value is, they tend to get pushed around by a lot of different kinds of strategies. So what you learn, and that's what I mean, Kenneth, when I say that the difference between price action, let's see, I'm looking for this one, hang on. Difference between these different kinds of price action, even just between night and day, is significant. And it's definitely very different among different instruments. For example, the absolute, and I always raise my volume when I have a really good tip that new people should listen to. The absolute best, easiest way to make money of any market I trade is when they're HMOMO in oil. Because when oil gets going one way or another, it can go 20, 25% in one day. And, it's $1,000 a contract per full dollar, like, 64 to 65, that's $1,000. So, once you get on the right side of an oil trade and it's profitable, you can add to it and just roll with it. And I've had them go, 20, 30% in my favor over a period of a couple of weeks, getting in on a scalp that just caught some HMOMO and kept going. So that's a specific answer to the oil market. But again, it's so setup context dependent, Kenneth, that your question only gets us to the question. There are nuances, and I have a lot of them, but I can't just throw them out at you. That's one really good one that I just gave you. HMOMO and oil is golden. However, remember what I said 2 sessions ago. Oil is by far the hardest thing there is to trade. It's the show. It's the major leagues, baby. If you don't have good skills and you think you're going to go into oil and get rich, guess again. I mean, I have routinely lost money in oil by being on the wrong side of the trade for even 10 seconds. I mean, that's how quick it can move when the momentum gets going. So, I mean, I've seen it move 100 ticks in seconds. So, and anybody that's traded has seen that. It's on the other hand, there's a lot of hands here. It's like there's not just a left and a right. I have 7 different hands, and on the fourth other hand, so my right, left, right is because of that action, there's a lot of cool strategies you can execute against it. And although the lock limits are much, much more liberal in some of the commodities like oil than they are in the indexes. So, you have more room to get into a momentum trade without worrying about lock limits. And again, these are all just little tiny pieces of learning, to be an expert in the instruments. And I'd be happy to continue explaining those things in due time. But I think that covers within the framework of this boot camp. I hope that is helpful. Okay, Barr, in searching for Bobby Fischer movie. Yeah, the one about Josh. There's a quote, "Do not act until you see the move." Yep, and that is really hard. That's the discipline. And Barr, the way you do that oftentimes, I've shown you guys a lot of examples of how to do that as a trader. Stake out the spots you want to trade in advance. So right now we're trading right here. And, 52 is an interesting long nibble. So you see what I'm doing? I'm kind of looking at a couple of high volume nodes. And I'm saying, if nothing else happens, these are places I could play. And that's one way to address what you're talking about. The other way is to be really fast, and when a move comes, just hit that market order button really quickly. And, a lot of times that can end up screwing you. So you don't want to do that. But, even right now, we've got a negative delta. The tape is rainbowy on the negative side. And I've got an order up here that's only a few ticks off the inside. I might get lucky and get filled up there and can catch it. Here we go. Missed by 1. Boom, we got it. Okay, so, and then we can try to set up the target and maybe add to it if I'm still working this range. So right now I've got a 3-tick target on this. It's pretty volatile, but I'll probably get that, Let's make it 2 ticks just so it happens a little faster. And would I take this one up here? Yes, because this is not telling me I'm trapped. This is telling me I'm going to make money. And if I get another one, I'll make more money. And there it goes. It just filled. So that was a profitable 2-tick drill. That's what we say in the group when we say we're picking up $20 bills. You can do that all day with a 1 lot. And, what's your risk? It's really nothing if you get skilled at that. How do you get skilled at that? By doing drills. It's funny how it always comes back to the same stuff. There's no shortcuts, guys. There's no cliff notes. There's no, rich dad, poor dad, Kiyosaki guy telling you the cliff notes to get rich quick. We don't get rich quick in the markets. We get rich very slowly by not losing money. Okay. Perfect, Kenneth. Yes, that's exactly right. Okay, thank you, Amy. Yeah, oil, I still lose money in oil. Oil is a hard one. Nate, you're not going to like my answer. Nate asks, "Hi, Jeff. Can I ask about an example from Monday? We skyrocketed up to 2,400, but you said it would very likely retrace and not take it out. Why was that?" I don't even remember. Let's go look. It was probably a ledge that I thought would get respected. And I don't know if it did or not because I don't even remember the conversation. So which day were you talking about? Monday? Okay, so what's today? Thursday. So this is Thursday. This here would be Wednesday. This would be Tuesday. So this was Monday back here. And so you're asking me why I thought 2,400 would hold from here? I'd have to know the context I set it under. You'll have to, capture the point in the video and screenshot it and ask me. It probably had to do with the order flow. I mean, what else would it have to do with? I usually elaborate when I say that, so I probably did. Okay, not off topic at all. Kevin, which book do I recommend first? I'll tell you, by far, I recommend this one, the Markets in Profile, simply because it's applied, this one right here. It's applied, which means, the concepts, there's real life examples of how to trade them. This book, the one before, Mind Over Markets, is also that way, but it's not as skillfully done. And Stettlemeier on Markets is if you want to understand the math of this better, and it's not about the application of it. So that is what I would do. I'd start with Markets in Profile. Oh, it was pre-market. Okay, and so you're, all right, let's go back and look at pre-market on Monday. Maybe I can, did I show it on a range chart or on the 5-minute chart when I said that, Nate? Because the range chart, I would have been explaining something different. I showed it on the volume profile. Yeah, but on the chart or the dome? All right, I don't understand the context of your question. It's important you guys be really specific and ask it when it's happening. Otherwise, I have to go back and look at that point in time and understand it. And quite frankly, I don't understand the question well enough now. So I'll deal with you offline on that. All right, are there any other questions? Absolutely not, Morris. Retired oil man. No. What you said is half true. Okay, I don't know what you did in the oil business, but news doesn't play a significant part in oil. What happens is news, oil makes news, okay? Geopolitical events will push oil in one direction or the other, but the order flow will always telegraph those things, either, if not before they happen, right as they are. Like if the OPEC meeting is unsuccessful, or, if Russia's doing something, or, I'm actually a partner in drilling in Texas for WTI. And, the advantage we have there is that the cost is so low. And yeah, I'm involved with wells that can produce for $5. The typical is $25, $30, for Texas oil production. And again, that's a very, I don't know exactly what you did in that business, but as a trader of oil, news doesn't play a significant part. It just, if somebody in the oil business, it would seem like it did. But the trades, the oil flow trade, or the oil flow trades in markets like oil will telegraph ahead of the actual changes. The news is just the thing that people say, oh, that was the catalyst. But in reality, if you look at the order flow, it was happening before the catalyst happened. Do you understand my point? It's a critical. With respect to, I'm responding to Nate James on, I'm responding to Morris on his oil industry experience. Okay, yeah, exactly. So as a diplomatic consultant, you're one of those guys that trying to apply logic to something, when if you think about the sovereign nation producers, all you have to do is watch their footprints in the market, and what's going to happen before the news tell it. Like the fact that that Russia wasn't going to agree with OPEC, and that was going to be a crushing blow. It was just so obvious that was happening. And now it's a totally different game. What I said about Nigeria is a really good example. There are a number of governments that could go under and get overthrown militarily because oil is so low. And so there's a lot of, powers that be, if you want, there's the Furus again, but, powers that be, not an organized, the Bilderberg powers that be bullshit, but the powers that be that, people that own a lot of oil production have a really strong incentive to see oil be higher than it is. That doesn't mean it can't go to zero. In fact, oil goes negative sometimes. A couple of you have asked me about that. So yeah, you get the idea, Morris. So you understand. As a trader, you would actually see that in the tape. You wouldn't need to. The news is oh, that's why that happened. And often the people know about the news before it comes out. So all right, let's see. Looking for other questions or comments. Yeah, no, great question, Morris, and I appreciate it. But it's hard, particularly if you're older and experienced in anything. But that's why doctors are so impossible to teach trading to, because a guy that can open up someone's skull and reconnect neurons, he thinks he's God, and he's not. But that complex is really hard to not have burned in, and instead, as we keep emphasizing, you need to have this art of learning approach, like Josh Watson, and not have the I already know everything approach. That's just so dangerous. What about Trump tweets? I game them all the time. When the market doesn't respond anymore to them, it used to more. Everyone's pretty much concluded he's full of shit. But back when the tweets moved stuff, when he had more ability to influence the market, they were gameable. He would say something, and steel would drop 7%, and anybody with half a brain was buying steel stocks. That's why he should be in jail and not in the office of president. That's illegal. But that's what's been going on for the last 3 or 4 years. It just doesn't work now because we have a superseding event. We have we have a black swan that has totally taken the price action out of the market. It no longer exists. So, it doesn't matter if you're Donald Trump or if you're FDR and you have a blank check. You can't fix this, by saying it doesn't exist or telling people to go to church or, throwing zero interest rates at it. It's just not possible. So, but again, news doesn't move the markets, Amy. The news is often the thing that looks like the catalyst. Look, this is a very sophisticated topic. I'm going to point you to one thing. There's a member in Surfing the Markets. He's another good friend of mine. His name is Stuart, and Stuart Emmanuel, this guy right here. And if you look at his posts, they look like just total craziness from a technical point of view. Stuart is a real estate. He owns property in Brooklyn, and he sells commercial real estate and whatnot. And he's also a really interesting mathematician. He uses a combination of Andrews pitchforks and whatchamacallit, the Elliott waves and CCIs. And this is a very, very sophisticated algorithmic system that is really good at swing trading the market. And my point is, if you follow Stuart's posts, they'll show a turn happening. And Stuart and I will chat about this occasionally in Surfing the Markets. And I will say, judging by the overnight behavior, looks like we're going to have risk off at the open and we're going to, get crushed. And then Stuart will throw up a chart of the SPX like that. And he'll say, yeah, you could see it's kind of baked in. And then we'll get the news report, 5 minutes before the open or a half an hour before the open or whatever it is, that the unemployment did this, like David asked, or that, real estate housing was that, and whatever it is. And guess what happens? The market does exactly what Stuart told me based on that analysis it's going to do as soon as it gets a catalyst. So that's the point we're making here for those of you. Yeah, those are Andrews pitchforks with median lines. That's exactly what those are. So the point is that the news is not the catalyst. The news is what the community thinks is the catalyst. It's a self-fulfilling prophecy. The event was already going on. The news just makes it visible. I hope that makes sense. That's a very, very sophisticated trader's view. That's not the kind of view that you have if you've been doing this for 5 or 10 or 15 years. It takes a long time to really understand all those pieces. And again, I don't criticize some of the conspiracy folks that believe that, there's Bilderbergers moving the market around, or that, that Soros's fund is doing, all that crap you hear on the media. The real world isn't like that. It makes for good conspiracy theory stuff, and Antifa on the other side. But, the reality is, if you're ever around any of that, even on the most fly on the wall level, which is my experience, I certainly am not in the league of any of those guys, but I've been around them enough at venture capital meetings and closings of deals. I've watched Mitt Romney in a room where his fund was involved and my fund was peripherally involved. And you know what? These guys do not, they don't conspire and work together. They can't agree on what time of day it is most of the time. So, you know, just the notion that, you know, these giant, rich, powerful people could be pulling secret strings about what's going on around the world. You know, yeah, you can do that when you have a really quiet market that's manipulatable, like when Trump first took office. It was real easy to just get everybody going up and you know, get all the, you know, tax cuts and buybacks and just make everything look like, you know, happy days are here's again. Well, you know, the music stopped. You know, that was all BS. It was all borrowed money, you know, just like it's been before. And we're going to pay for it. This is going to be a crushing recession, maybe a depression. And, you know, the sooner you can abandon any of that kind of thinking and just go with what's happening, the better off you'll be. That's my, you know, my point, making all of this stuff. It has nothing, yeah, exactly, Jack. You know, it's the deep state cabal, you know. We voted for Trump because he's a businessman, you know, as he's robbing us blind. I mean, there's people that just, you know, it's Dunning-Kruger, and it's confirmation bias. You see what you want to see unless you actually do your homework. And you don't do it from traditional news sources. You know, if there's a bill, you don't read what Fox News says about the bill. You get the actual bill and you read the damn thing. And you know what's in it, and you know what it says, and then you're intelligent to talk about it, not based on the story you saw on Fox News or on CNN or on MSN. It doesn't matter what the source is. They all have an agenda, and, you know, for you to then take the other point of view that, oh, it's mainstream media, you know, the only place I'm going to trust is, you know, the Blaze, then you're just an idiot. You know, I'm sorry, but you are. You're just, you know, you're being herded like a sheep, and you're letting them do it to you. You have to find your own information and draw your own conclusions to be a good trader and to be a good citizen of the planet. Okay, I will come down off my soapbox and take some more questions. That one was relevant, though. Chop is an opportunity. I love how you're learning that, Brent. Isn't that a crack up? How, you know, go on Twitter. Oh, it's too choppy. I'm not trading because it's choppy. There's no trend. The uptrend got broken. You know, these guys are all just explaining exactly how little they know about trading. That's what they do, and it's mind-boggling. Okay, so great session, you guys. I'm really stoked. You know, we just could not have a fourth session that was any more productive from my point of view as an instructor. 1 second. Sorry, it's just getting really hot in my office, so I have to turn on some fans. One thing, when you have a whole lot of computers, you know, literally every computer is a heater. And even though it's like 45 or 50 degrees outside here in the mountains, or it's warming up, I mean, I got to blow some cool air in. Okay, so I'm going to put my microphone down for a second. And don't go away, everybody. I'm literally just going to sit down and go turn on a fan that's on the other side of the house. And then, yeah, that's because your computers are heaters. And your monitors are too. And then I want to take anybody that wants to say anything or ask any questions. Lee, if you have a comment you'd like to make, Amy, if you'd like to make any comments, you know, I would like to kind of make sure we understand everything we need to, you know, as a boot camp, because I really want this to be a valuable learning experience for your $49. You know, I hope you feel like you got your money's worth as well. So anyway, so let's put that back up. I'm going to go turn on my fan. I will be back in 1 second. Okay, I'm back. So the reference, when I went running this morning at 3 a.m., it was 44 degrees on my street. And right now it's 55. I live at about 1,400 feet, 1,500 feet. Not very high, but it's a, you know, Santa Barbara and Montecito are a peninsula out in the ocean. So we get that cool ocean fog. Okay, Blink is a great book. Yes, it will definitely help you understand reading the dome and understanding, you know, the action. But, you know, again, I will stay and answer questions as long as you guys want. But I hope we accomplish this. You know, I hope you're looking at this slide and you're saying, yeah, I get that the charts are misleading, and I understand price action. Maybe I'm not expert, but I kind of get the difference, and, you know, and I understand that this stuff matters, and that's really where my edge could be to be profitable, and that the way to practice that is right there. You know, remember what Bruce Lee said: I don't fear the guy who knows 10,000 kicks. I fear the guy who's practiced one kick 10,000 times. That's the notion of a drill. And, we've got that up in our Slack. You can just learn one setup like Blair's done and just do it over and over again. I thought I had that up in the Slack. Oh, you know what? It's in the masters. Yeah, it's there. So yeah, there's a lot of good wisdom up here, but that's one of those there. And so I hope we got you to this stage of learning, and you understand that the next really important thing is to build yourself some sort of process playbook combination. And there's a lot of that going on in the Slack. There's a lot of conversation about that, and we're here to help guide you if that's something we can do, any of us. Okay, so Lee, Amy, do you guys have anything to add? Lee, you want to say one more final comment to the crowd? Maybe tell us a little bit about what's coming up in your world, the next boot camp, which will be free. Putting you on the spot. I don't even know if you're available, so I'll keep talking. But I unmuted you, Lee. Or I didn't. I think you've got yourself locked. Okay, you must not be available. Okay. No, now I see you're unmuted. Let me know if you can talk. Amy, likewise, if you want to add anything. Otherwise,
yeah, there was.
There's Amy. Good.
There was a ongoing discussion with a couple of people. Sorry, my dog wants to talk right now. Why do they always talk when you start talking?
Oh, that's because they hear you.
Ugh, drives me nuts. On the one tick drill and how to avoid your going against you too far. And there's been a little bit of an ongoing discussion in Slack about it and what's an acceptable loss when your take profit is one tick. I know you've said it 100 times, but maybe you can elaborate on that a little bit more and kind of again. The whole point is getting a good entry so that there's your loss has to be minimal.
Okay, great question, great points. And the bottom line on that one is it depends on the setup you're trading. If I'm trading a really tight market like I'm seeing right now, and I'm going to switch this to a one tick, which I think has a 6 or 7 tick stop, which is way too tight if the market's moving. But if I can get a good entry here, there we go. Okay. You see that? I got my tick. That's how fast it happens. So, but you can also get stopped out that quickly. So like this will be a good one to try short for a tick because it's probably going to touch that and blow through it. But the odds that I can get a tick the other way are really good. The trouble with doing this in a market that's moving is that 6 or 7 tick stop will always get you stopped out and it'll never work. Yeah. So let's go ahead. Are you trying to say something?
No, I agree. That's 100%. I use a much bigger stop. It literally is catastrophic if my dog pees on my computer or,
I'm getting to that right now. So that's an example I'm going to show you. So I want to just see if this one executes first so we can actually see it fill. I think this will based on the tape I'm seeing here. All they got to do is get it to trade at 75. We'll be in good shape. But this guy is intimidating people right now. But here's a good order flow tip. That's the point of control. And if you're looking at all the Furu sites about order flow, the point of control is very important. The point of control is completely meaningless. Total nonsense. It's just the highest volume point, but there's a dozen that are right next to it here, so it's meaningless. So don't let anybody, Now the point of control on a very fast footprint is a different thing. That's more of a balance issue, and you can see I put a box around it in white. Oh, cool. Damn it, we missed by a tick. I want that. There we go. Okay. So see, that's my stop. It's too close. And
so you can get overrun really
just
quickly.
by the current momentum. And that's why, let's flatten this spot. That's why what I use is HMOMO instead. And I'll do the same thing, but see, it gives me a lot of room. It's just catastrophic. And that way I can bring my target in and adjust it for the action. So that's the answer to the question. And it takes some skill to learn how to do this. I just got a one tick winner and my stop was up there at about, a $500 loss. And you just simply cannot frame it in the Furu traditional risk to reward kind of point of view. At least not that setup. There's other setups you can frame that way, but one tick scalping isn't one of them. That's all. So good question, Amy. Thank you. Good clarification. Yeah. All right, let's see. Lee, did you want to join us and say anything before we go? I see you're unmuted. I don't know if you're available or not. Going once? There
Yeah,
you
Jeff, I'm here. I double muted myself, so I use the mute button on my headset as well as Zoom, and it's too much for my little brain to.
I did that once, and it took me a half an hour to figure out why I couldn't talk, so I get it.
So in terms of forthcoming attractions, what I'm planning to do, and we'll fix the schedule some point next week, I am taking a bunch of my structural setups. So these are mainly based upon market profile. So we've got times of day or levels established at times of day. We've also got some conditions which will exist at structural points in order flow, such as unfinished business at the high low of the day. And I'm going to run 2 sessions where we'll review the structural based setups. And obviously we qualify those structural setups using order flow at the levels. Excuse me. We'll split them into 2, probably one which is sort of inside out trades, the other which is outside in and anything else. And then we'll run a 3rd session, which is Q&A, office hours around these setups. So I'm in the process of polishing the playbook for these with some graphical examples. I'll pull together a bunch of examples because we can talk through them passively. And we'll play that out over the next couple of weeks and see how it feels.
Awesome. Okay. Thank you for that. And I just want to add one other previews of coming attractions to you guys. I have my playbook also, which, are plays that, they come and go depending on the market and, as we add new stuff. But for right now, the ones that we discuss currently, as I mentioned before, I'm JM, Lee is LH, and I'm also putting together my playbook and just basically a PDF that explains the basic idea of each one. And I'll be publishing that next week. I just haven't had time to finish it because I've been working on the boot camp, and it'll just give you a real short and sweet, simple idea. Like when I say, okay, right now I'm working a range and I'm scaling in and out, you'll know what the heck I'm talking about. And an example of that would be to be long here. And, I just got a 1-tick scalp there, or I'm about to. And so I don't want that ATM. I want my HMOMO. And so what I would do is I might enter that trade and then look to add to it on pullbacks, and then maybe look at taking initial profits on moves up. So right now what I'm doing, and that one's about to get a 7-ticker. Oh, I missed by 1. That happens a lot. It's frustrating. But that doesn't tell me I'm wrong. It just tells me to scale into it, and I'll get it. It just, I'm in the ebb and the flow, and I just didn't get out of the flow at the right time. That's all that means, and that was a really good example. It literally traded at my price. I just wasn't far enough up in line to get filled. So anyway, what I'm doing here is I'm just working a range, and now I might be on the wrong side of it, actually. I wasn't at first, but I need to step back a bit and look at it. No, this is still the right spot. I can see it. We just need to get a little bit, there we go. Okay, so yeah, there's the first winner, there's the second winner, and now we might even be able to trail a stop under here if it gets going a little bit. And there we go. Okay, come on, baby. Up, 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 go, go, go. See what I'm doing? I'm just kind of pushing my stop under it. And so the target isn't about a price level. It's just I'm letting the action kind of determine, where I'm going to go. And right now, I've caught a winner here just by scalping into it. And, that's how it works. So let's see how far this one goes. This will be a great thing to wrap the boot camp up on. And where, I trail it and when I move it up is an art. There's no math to that. Okay, we just made, what, $250 on that one lotter there? But I did it by working a setup that I call scaling in and out of a range. And, that's one of the ones that can be really lucrative if you learn how to do it. And, it's this idea of range trades, and you will see it in different setups of mine. A ledge is a form of a range trade. HV reversals are, the first hour high and low is. I used to have an actual setup up here that I called the range, and it looked like this right there. But again, trying to teach it, I realized people didn't get what it was. So I took it off, and you just saw an example of it. It's about a range that you're defining yourself. It's not a range that necessarily is in the market at any moment technically, although mine tend to coincide with the LRCs just because, that's the kind of action I'm watching. All right, that was fun. That was a good example. So anyway, more of what's coming. You can see me trade live more frequently. And and that's a really good example of how you can literally have no risk and pull some nice money out of the market just by understanding, the energy. Kawika, one last question. Do you use your blank to go back and attempt to articulate? Yeah, okay, that is an excellent question. That question, what he's really asking me is about journaling. And if you look at my steps to trading profitably, which, you know, I did as just come one of those furu things. I had to do it because everyone's saying, well, can you tell us the steps of your, okay, I will. But, you know, I hate step-by-step stuff because it's more iterative. You're often in between, you know, 2 and 3 a lot, and you're cycling around. So when one of our members put that up in his process share, I really dug it. I think that was Naresh Chips that did that. But somebody did, and it was just really, you know, obviously this person's hearing what I'm saying and he's learning. This is a great example. He's made a flowchart out of this idea, and a lot of people take that approach, and I have done that in the past as well. So great work, Chips. That's you're learning exactly what we're teaching, and so this is the flow I'm talking about. And understand that I do have in here a really quick, you know, quick notes journaling, but I often don't even know my setup when I do that. I'll just, you know, if it immediately comes to mind, I'll put it in, but oftentimes it's just a keyword, or, you know, I'll just throw in there, you know, retrace or long trap, you know, I'll throw in a keyword with a pound sign, you know, hashtag, which is how Journalytics tracks them. And then I'll go back and elaborate later. So that's adding detail later. So I hope that answers your question, Kawika. It's a great question. Which one, Jack? Oh, about the volatility. And yeah, she answered it correctly. She's right. As long as you're skilled at understanding what the price action is, you learn to do what I just had a 40 tick stop or whatever that was, and yet the trade was profitable. And when it went against me, my instinct was immediately to add to it, not as adding to a loser, but to say, oh, cool, I'm getting a better entry, because I wasn't doing it based on the price. Again, I was doing it based on the order flow. And that's why it's so critical to learn, Jack, because the order flow will never steer you wrong. And the prices often will. And that's why I recommend you black out your prices and just trade the flow. And that's also why footprints, very fast footprints, are useful, because what they do is they kind of give you an idea, like, you know, let's say I just put up 20 seconds and I look at it over, you know, this is going back a reasonable amount of time here, you know, 5, 8, 10 minutes. And in the market, that's hours. It really is, as far as collecting information. So let's let this populate. And so you could see, like, you know, if you were thinking short, this would be a really good spot to lean right here, because, you know, you had a good stop out level, you know, risk was clear. The delta went your way immediately. The price went your way immediately. So that was a real clear idea of a short. And then, you know, down here, not so much. You know, the action has shifted, and then it actually became a long. So if you let the footprints kind of show you areas that are inflecting, you know, that are becoming inflection points, and are giving you little high volume nodes, it will kind of lead you in the right direction. You just have to learn to let it. And that Amy's answer was correct, Jack, and it was good guidance. Remember, you've been fooled for years into thinking that you can let a trade work, and nothing could be further from the truth. Good entries are immediate. You know, remember the 3 Doc-isms. Good trades work right away. If it doesn't work right away, you got the entry wrong. That's all there is to it. Item number 2, always take profits. You know, it's not the other way, you know, let your trade run. Nonsense. Nobody ever lost money taking a 2-tick winner on the ES and paying $4 in commissions. You can do that all day and walk away with a couple $1,000s. So that is more nonsense. You just have to learn to read the order flow and make sure you get your entry right. And then the last item of those 3 is don't lose money. If you're wrong, get the hell out of the market and figure out why you were wrong. You know, do not get caught in this loop of having a bias and you just keep going in short and it's not working and you keep having losers. That we call the insanity check. You know, insanity is doing the same thing over and over again, expecting different results. That's what you're doing when you're doing that. So just stop it. And if you say, well, I do that too much, well, then learn some discipline or get a trading partner to teach you some discipline. And some people never can do it. That isn't out of the question. Okay, how do I reconcile my adding, subtracting, Jack? I was really clear about that. So either you weren't listening to me or something else is wrong there, because I made that really clear. I'm working a setup called the range, and the setup is still good. I'm getting a better entry. So I'm not adding and subtracting. The setup is scalping core position within and out of the range. So I'm using the range as my setup. It is working, Jack. You're not working in that setup is if I lost 20 ticks, not 3 or 4, and I'm adding to it. Okay, good. Thank you. Thank you. I'm being emphatic because, again, you're trying to frame this into your, the education you've had elsewhere. And not working right away is within the context of the trade setup, not within the context of, this particular second, because a range trade can go on for 2 hours. And I might scalp in and out with, 1 or 2 lots around a 5 or 8 contract position. I might do that for 3 or 4 hours, but I'm not in any 1 or 2 of the contracts for any more than, 30, 45 seconds. So, I'm not picking on you, Jack. I'm really trying to help you understand it. It had gone 500 against me, but I didn't close the trade out. I was just looking at the P&L. It was way, way against me if I had let it stop out. But my point is I didn't do that because I knew the trade would give me the profit that I was in it for, which was scalping for a few ticks. And the only way I can make this make sense to you, Jack, is if you learn how to do it and you do the drills and then you come back and have the experience of the 4 or 5 people that are giving you that feedback right now. You're not going to learn this intellectually, Jack. It doesn't work like that. And you're one of the people I don't know that much about. I know I read, a few things that you might have shared in the slide, but if you didn't do it in the introduction, if you could give me a lot more information about your background, maybe I could tailor some of that commentary more toward you, and it might be more helpful. I can try to do that. Okay, I'm really tired, guys. It's almost noon. This is a 3-hour, 1-hour session. No, you know what, Jack? Get up, you and come on, everybody. Jack, you're having the exact same conversation with me that John Miller did. John took a step back and just looked at the price action. He didn't look at it from a perspective of his trade setups before he made that decision. That's the problem. You're biased. I'm seeing your bias in the questions you're asking. That's why I'm picking on you. You're not thinking with what we're telling you to think. You're thinking with what you already know. Hook up with John Miller and the comment that he made publicly in the channel or in the public chart channel. He said the exact same thing and how that was a game changer for him simply because he abandoned that idea of the setup and just focusing on the price action. All right, I don't know what that means, but you're welcome to stick around, Jack, and I'll try to keep getting my point through to the best of my abilities. All right, guys, if there's not any other questions, I'm going to take Burning Desires going once, Burning Desires going twice. All right, with that, I'm going to end the meeting. Thank you very much for participating in the boot camp and hanging out with us for the rest of the month, PRG, if you took that deal, and hope you stick around. I really think we have something of value. So, if it is, great. If not, we'll see you out there. And yeah, I will be sending out documents to let you guys give us some feedback if you want to do it anonymously and whatnot. Yes, I will. And thank you very much. We'll do that with a MailChimp or something. Say whatever you like. Thank you very much. That makes me feel great when you guys, put up positive feedback like that. As I said, it makes my day. I don't do this for the money. I often do. It's the only thing that gets me out of bed. And so, just seeing you guys say that to me, it's wonderful. So thank you. Okay. We'll talk to you more in the Slack, and we'll be posting more events. It's not on the calendar yet, but I'm likely to do an event over the weekend. Just a live chat and maybe the pre-open I do on Sundays once I see what my schedule is going to look like. All right, folks, good luck, good trading. Stay frosty out there. I will see you on the other side.